Let's do this. Let's do this. There, that. There we go. And here we go. Here's Johnny. Let's go. Let's get it rolling. Hey, how many people we got hit? Nobody on YouTube yet. Nobody on Facebook yet. Nobody on Instagram. And here we go. FinTrade. How you doing? Rodney. What's happening? Big Marty from SE. Salt SE, SE, SE. Where the heck is SE? No idea what SE is from there, Big Marty. Biz Coach, what's happening? One Bobby. Seika Boys. Araspa. Cool beans. B-Rat Daddy, what's up? Johnny Burman, what's happening? Bad CB, bad C8, bad C8, bad Kate? I don't know. Okay, Just Rich, cool name. Ross Kelly, what's happening? All right, AB11, what's going on? Let's get started. So here we go. My name is James. This is Dividend Stock. Hey, old dog's in the house. What's happening? Donovan, what's happening? Mr. Versace. Washington, D.C., southeast section. Well, jolly good. T-Rex, back again. Scotty C. BC Boy, Sleepy Joe. Look at that. Joe Biden's in the house. Sleepy Joe. Paul Boyd. Kelly, what's happening? All right, Mike, Lee. All right, CD Duckweed. Okay, CD Duckweed. Cool. Interesting name. Angel Chicago. All righty. John Smith. Let's get ready to roll. My name is James. This is Dividend Stock Talk, where I invest in dividend stocks, specifically dividend stocks that have consistently increased their dividend payments to their shareholders. That's me and you. You buy a stock, you become a shareholder. So you have two options here, okay? Option number one, you can buy a company that does not share their profits. Basically, capital appreciation. So you buy a stock and it goes up, 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 up. If that's what you're looking for, you are in the wrong place. Simple. Don't waste your time here. I'm not looking for capital appreciation. I'm looking for cash flow. Hey, TGR. What the heck does that mean? TGRDSPJL. Why couldn't you just be Bob or Tim or Peter, Sally, something like that? Richie, Cordoza, what's happening? Joshua, Jay Patterson, cool bean. Welcome, 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 guys. Okay, so as I was saying, you have two opportunities. One, a company that'll take all the money, all their profits, put it back into the company for capital growth. If you're looking for your money to go from here to here really quickly, this is not the right place for you. Okay, I'm looking for cash flow. More specifically, safe, predictable, consistent 1% per week. I know it doesn't sound very romantic. I know it doesn't sound very lovely, but no, 1% a week is 50% per year. So look at it this way. If I had 100,000, 1% a week is $1,000 a week. I can live very comfortably on $1,000 a week because it takes me 5 to 10 minutes a day. Companies that are consistently profitable. It boggles my mind people would invest in companies that aren't consistently profitable. If you could, please explain it to me in a manner in which I will understand it. Okay, Joshua, I really appreciate that, but one like is perfectly fine, okay, because you're clogging up the... Don't take it wrong, Josh. Okay, I appreciate it, but you're clogging up all the other questions. Amy's TikTok. What's happening, Amy? All right, anyway. Today's Tuesday. Second day, ready for this? Second day of the second week of the first quarter of 2025. Project Paul, Riley, what's happening? Lost Alex. Okay, Rob Banker, how you doing? Okay, that being said, there's 52 weeks in a year. Okay, 52 weeks in a year, 4 quarters. We are currently in the first quarter, second week of the first quarter. There's only 13 weeks in each quarter. I have $1,000 to invest every month. How do I start? Amy, thank you for asking. If you really want my opinion, Amy, what I ask people is send me your number. I'll give you a call. Because you being here, you are now susceptible for people here that are looking to send you information, trying to sell you something, trying to do what. But what I always tell people, number one, I don't do WhatsApp. I don't do, what's that other one? WhatsApp, Telegram, I don't do that. I don't do cryptocurrency. I don't do Forex. I don't do smart contracts. I don't do any of that weird stuff. I do dividend stock investing for weekly cash flow only. So if you receive an email, a text, or some kind of a message saying that it is me and I'm asking you to do this new thing, no, that ain't me. That's why I always tell people, live, you're hearing my voice, you're seeing me speak. I say, if you want to talk to me, send me your number. I will call you. We'll have a conversation. I'm not going to try to sell you anything. Okay, we're going to go through the whole evening tonight, 2.5 hours, and I'm not going to try to sell you a damn thing. I'm just sharing information. The reason why I'm sharing the information is because I was brought up on welfare. I'm a welfare baby from the 60s. My mom was a single mom with 6 kids. Okay, so yes, she got government assistance. Nice, you guys might be nice. Nice to know that all my brothers and sisters, well, we own our own homes. Some of us have our own businesses, but most of us, there's only one of us, one brother that is on a government assistance. It's because he lost his hearing and he can't really work properly. Michael, good seeing you again. You were here last night twice. You were here in the morning show. I mean, the evening show and then the late show. You'll do that, Amy. Good. Looking forward to hearing from you. But Amy, be leery. If you get a text message saying that it's me, it's probably not me. Okay? I don't reach out and force myself upon people. I don't send anybody anything unless they ask me to. Okay? So if you want to talk to me, give me a number. I will call you personally. Not an assistant, not a flunky, not one of my no, me personally. All right? So that being said, let's get started. It is the second day of the second week of the first quarter of 2025. Jackola, cool beans. Maurice, what a cool name, Maurice. Bleep bloop, bleep bloop. Okay, Tony, Scalp and Bee. All right, Tony, that's a cool name. All right, Dave Diaz, what's happening? All right. So let's get going, let's get started, and I need you guys to give me some stocks to take a look at to get your opinion of what you guys are looking at. Michael, I'm here to learn and make money. Cool beans. How many contracts did you sell Monday? Oh my goodness, over about 400 contracts. Now remember, Big Marty, I have 7 accounts now that I take care of. Old Dog, Robert, Mickey D's. Stu wants to take a look at Mickey D's. All right, so I'm going to, listen closely, I want you to understand this and hear this. I'm going to stop the comments only because I stop them so I can do one question at a time. Look at one stock at a time. That doesn't mean I'm not going to get to your question. I'm going to get to every single question before the night's over. Uh-oh. Tech Shark wants to look at piece of crap RITM and piece of crap OWL. I'll take a look at both those pieces of crap and I'll tell you why I don't like them. Specifically, why I don't like them for me. If you like them, if it works for you, great. Right now, we're going to take a look at Mickey D's. Stu wants to take a look at McDonald's. All right. Now, understand this. I'm looking for specifically, so you guys don't throw me crap like IONQ. So you don't throw me crap like that. I'm looking for companies that are consistently profitable. Okay, and I'm not talking 1, 2, 3 years. No. I'm talking 2 decades minimum. Now, you guys understand, this is what I do. You figure out what's right for you. I'm just going to go by what I do. I want a company that is profitable for at least 2 decades. That does not mean profitable 1 year, not profitable the next. No, I don't do the 1 step forward, 2 steps back, 3 steps forward, 2 steps. I don't do that crap. Every single year, higher and higher and higher and higher profits. And we will take a look at RITM, OWL, and IONQ. And I will show you why I don't like them. Because they are not consistently profitable. Okay, this is your money we're talking about. You invest your money the way you feel best for you. I'm going to do what I feel is best for me. And one of my criteria, I have 2, only 2. It's amazing. Everybody looks for different things. I look for 2. 1, consistent profitability. 2 decades. Consistent profitability. 2, weekly options. That's it. That's the only 2 criteria I'm looking for. Consistently profitable and weekly options. Okay, remember I said I want a simple, safe, predictable, consistent 1% per week. This is how I've been doing it for the last 15 years, and I'm sharing it with you guys for free. Not asking you for anything, so let's start with Mickey D's, McDonald's. All right, here we go. MCD. All right, let's try it one more time. MCD. There we go. Now, first thing I always want to look at, and it doesn't take more than 3 seconds. You ready? See if you can do this as quick as I do. You ready? High, low, was, is, and direction. Okay, it should take you 3 seconds to look at a 1-year chart. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the direction. Sideways, down, up, down, sideways. Really not that difficult. Great. It doesn't look that bad, so let's look at the numbers. The numbers, what does that mean? What am I buying it for? What am I selling it for? And what is my profit going to be? Now remember, simple, safe, predictable, consistent, 1% per week. Tomorrow morning, let's slide this over so I can see the numbers a little bit better. Tomorrow morning, I can buy McDonald's at $290.23. What is the closest strike price? Now, when I say a simple, safe strategy, I'm talking about a covered call where I buy the stock, I sell somebody else the rights to buy it from me for the exact same price I just paid for it. So if I'm buying it for $290, I'm selling it to someone else for $290. Well, I'm going to collect $3 per share. What does that mean? Well, that means I'm buying it for $290.23, and I'm selling it for $290. I'm losing 23 cents right off the top, but I'm collecting $3 per share. So what does that mean? Well, it means I'm collecting more than 1% for the week if I like McDonald's. Well, the numbers work. So now let's look at the chart. And is the chart telling me it's a good time to buy? Well, there's a couple of things you need to understand about a stock. A stock is like a river. It flows in a certain direction. Also, something you need to know about a stock is they only go in 2 directions, up or down. They do not come to your house and make you breakfast in bed. They do not take the dog out for a walk. They do not rake the leaves. They do not trim the hedges. They go up, they go down. If you're expecting a stock to do anything other than go up or down, you're in the wrong game. And don't mistake it, it is a game. Kind of like Monopoly, but with real money. Okay? All right, so a year ago, we're at 289. We dropped down to 245, jump up to 320, back down here, just trade sideways in this area right here. So let's take a closer look. Okay, a year ago, 290. We bottomed out in the middle of July at 243. Okay, we topped out right here, 1021. That was October 21st, and the top was 317.90. Now look at the last couple of months. Okay, here's the last couple of months. The high, the low, it was, where is it? Look at the direction. Down, up, down, up, down, up, down, up, down. Well, it's currently going down. Do you know what that means? Next. Sorry, it's coming down. As soon as it finds its bottom, look at the last 30 days. Last 30 days right there. Okay? 30 days ago, here's your high. Here's your bottom. She went up, she went down, she went up. Now she's coming back down again. So, here's the thing with McDonald's. This is just my opinion. Okay? Just my opinion. It's looking for a new bottom here. As soon as it finds a new bottom here, great opportunity to jump in and go back up, because that's all they do. When it gets to a 30-day high, you have assholes like me that say, hey, that's profit, I'm taking it, I'm out of here. And then the stock goes down. Once it gets down here, gets low enough, then you have guys like me who jump in and say, hey, I'm buying it, and then she goes back up again. When it goes high enough, we jump back out. I'm not looking to get married to a stock. I'm not walking down that matrimony aisle saying, hey, I love you, I'm going to be with you for the rest of my life. No, no, no. I'm going to be with you as long as I get 1% out of you, then I'm going to kick you to the curb and move on to the next. Simple. Safe, predictable, consistent, 1% per week. All around 220 or 2024. How are you doing today? All right. So McDonald's is going to be one of those stocks we will keep our eye on during the week. Why? Because I'm waiting to find the bottom. Once the bottom shows up, I'm going to see what the numbers look like, and then if it's enticing, then I will jump in. At this moment in time, I'm going to put it on the back burner. Sorry. Okay, so Tech Shark wants to look at RITM. Well, let's go take a look at it. RITM. No. Do you know why it's a no tech? Number one, when I say a company that is consistently profitable, 20 years, 2 decades, 20 years, and weekly options. Why do I want weekly options? Well, I cannot get weekly cash flow from a company that has monthly option. Couple of reasons. One, the numbers just don't work. I don't care how much you want to argue, how much you want to debate, any of that crap. I really honestly don't care. The numbers don't work. I can go into a shoe store and find a beautiful, awesome shoe. If it don't fit, there's no sense in me buying it. It's just that simple. RITM is a monthly. Monthlies don't work. Currently it's at 11. The 11 is here. The 11 is going for 10 cents a share. That's not 1%. Okay? And then look down here. The 11, oh, look at this. It's going for 2%. That's awesome. But I got to wait 6 freaking weeks. 6 weeks. Why would I want 2% over 2% for 6 weeks? No. The numbers just don't work for monthlies. Please don't have me look at monthlies. Now, I have 5 simple rules. Number 1, let's understand one thing so we all know where we're coming from. This strategy, what I'm teaching you now, I created it when my 9-year-old daughter, I'm going to show you a picture and I'll show you a little video so you get a little bit of an understanding. Hold tight. Uh-oh, she's coming up. Hold on. Uh-oh, where'd my voice go?
Internet website called Thingy, which my dad doesn't let me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you can choose from.
Okay, so that's my daughter. This is me 15 years ago.
What does that mean? That means every single day.
It's my favorite part's coming up. Hold on, you'll love this.
Different company paying out dividends.
All right. So when she was 9, she said, Daddy, can you teach me what you're doing? Great. Wonderful. How do you create a trading strategy for a 9-year-old? It had to be simple. It had to be safe. It had to be predictable, consistent, and no way for her to lose. You like that, number 5? The reason why is if she loses, she's going to cry. I'm going to feel like shit. Mama's going to get involved. I'm going to be sleeping on the couch. The couch is comfortable, but you know what I mean, okay? Simple, safe, predictable, consistent, no way for her to lose. That was specifically for her. So I came up with 5 rules. The rules are pretty simple, okay? Now, let me tell you right up front. Adults have a tendency to make this more complicated than it needs to be, okay? Rule number 1, never buy something you don't understand. What do I mean by that? If you know RITM does not have weekly options, then you shouldn't request me to take a look at it. It means you shouldn't be buying it. If you don't know it, if you don't understand it, don't buy it. It's actually that simple. If you don't, now Mickey D's, that has weeklies. That is Mickey D's. Everybody knows who Mickey D's is. That's plain and simple. WBA, Walgreens, we all know who they are. RITM, I have no idea. OWL, no clue whatsoever. IONQ, no clue whatsoever. They're not on my list because they don't have weekly options and they're not consistently profitable for at least 2 decades. So yeah, I pick on them because it makes no sense to me. Why would you take your money that you work for and put it into something you don't understand? Because when I say rule number 1, never buy something you don't understand, why the hell are you asking me about RITM, IONQ, and OWL? I got a lot more to pick on. I do. But if it doesn't make sense, don't buy it. That's rule number 1. Rule number 2, never sell at a loss. It defeats the purpose of the game. And don't kid yourself, this is a game. It is, just like Monopoly. 4 greenhouses, 1 hotel. 4 greenhouses, 1 red hotel. It's a game. You buy, you rent, you make money. It's passive, wonderful, great. Don't make it more confusing than it needs to be. Rule number 3. This is a good one. Make sure the company is consistently profitable. I like 20 years of consistent profits. That's me. If you like 5 years of profits, hey, that's you. 10 years, great, wonderful. Just don't ask me. Doesn't fit. Now, the reason I say this is because we looked yesterday. There are 9,800 and I think it was 38 companies available to choose from. 9,813 or 18, something like that, weird number, that are available to invest in it any day of the week. So why would I want to look at something that doesn't fit? If it doesn't fit, don't buy it. Okay? All right, anyway, let's keep going. Rule number 4, weekly options. Why do I say weekly options? Well, mainly, I don't want to sit in front of my computer all day. I don't. 5 or 10 minutes. Every video you hear me say, hey, this is James from Dividend Stock Talk, brought to you by the 10-minute trader. That means I don't want to be in front of my computer for more than 10 minutes. If you don't have 10 minutes a day to take care of your personal finances, well, then give your money to someone else. Let them do it for you. And I can guarantee you with 99.9% accuracy, nobody has more interest in your money than you. Maybe your wife's lawyer or your ex-husband's lawyer, or you know what I mean, or the IRS. But nobody has more interest in your money than you do. Why are you giving that responsibility to someone else? Now, here's another question to ask yourself. If you have, let's say, 50,000, well, 50% of 50,000 is 25,000. Well, that's the opportunity here. If you have 200,000, well, 200,000 at 1% a week is $2,000 a week, which is $100,000 a year. It depends on how you value your time and how you value your, let's say, retirement, because we're all going to retire at some point in time. Let's get back on track. Rule number 4, weekly options only. I cannot get a weekly cash flow consistently unless it has weekly options or I sit in front of my computer all day. Okay, I have no desire for number 2. Weekly options only. So that's it, 2 criteria. Consistent profitability and weekly options. Rule number 5, make sure the numbers work. Now, I went over the numbers a little bit, but let me go a little bit deeper, all right? The numbers, what am I buying it for? Okay, right now it says 11 bucks. Okay, what am I buying it for? What's the closest strike price? Now, when I mean strike price, we are talking about weekly stock options. Because I want weekly cash flow, the only way I'm going to get that is weekly options or sitting in front of my computer all day. That ain't going to happen. Weekly options, 10 minutes a day, I'm good. All right. What am I buying it for? What's the closest strike price? What is it going for? And is it giving me 1% a week? It's actually that simple. And that was rule number 5. Okay, yeah, rule number 5. Simple, safe, predictable, consistent, no way to lose, and never buy something you don't understand, never sell at a loss, consistently profitable, weekly options, and make sure the numbers work. Not just these numbers, but the chart also. The chart's going to tell me when to buy it. Because the chart is you and I creating the river, the flow. Okay, this mess right here, let's open this up so you can get a better look at it. Okay, this mess right here is what you and I create, the buyers and the sellers. We say when it's too high, we say when it's too low. The market is just fulfilling what we're doing. Okay, great, it's a good bargain, I'm going to buy. What happens when I buy? Well, it forces the price up. It gets to a certain point, and I say, wait a second, this is too high, I'm going to take my profits, and all of a sudden, it's going to come down. Whatever's happening in the economy affects this in some manner or another, but it's you and I who make it go up and down. All right, so let's take a look at OWL, and I'll tell you why I don't like that one also. OWL, Blue Owl Capital, monthly. Cannot get weekly cash flow out of a monthly optionable stock unless I decide to sit in front of my computer, which I already said I'm not going to do. So, sorry about that, dude. Those 2 companies are no and no. I'm going to do IONQ next, and you're going to see the exact same thing. Wow, missed all these. Oh, crap. Sorry, Ted. Hey, I got to pick on someone. Caleb, how are you doing? WCA. What the heck is WCA, Caleb? Oh, okay, got it. So mostly aristocrats or kings. No, hold on a second. Tech stock, excellent question, excellent point. Hold on a second. Shalom, Hassan. How are you doing today? Great. Greetings from Arizona. Double cool beans. Good. Got it. Got it. Got it. Kim, will you analyze Macy's? I love Macy's. We'll do that in a second. Michael, what's happening? Your other screen froze. It didn't freeze. I just stopped it. Okay. Stop. So, now, he did mention something about just a dividend kinks and just a dividend aristocrats. That's half of the equation. Now, good point though. I like the dividend kinks. 54 companies that have consistently increased their dividends for more than 5 decades. There's a company called GPC, Genuine Parts Corporation. They have, you ready for this? 70 years of increased dividends every single year. Not, not every once in a while. No. Every single year. It's like 1, 3, 4, 8, 9, 12, 15, 16. Always, every single year, higher and higher and higher profits. Those are the companies they want. I don't do GPC because it's a monthly optionable stock, unfortunately. Okay, so that's the dividend kinks. Dividend aristocrats, 25 consecutive years, 67 companies consistently increasing their dividends for more than 25 consecutive years. Dividend champions, 150 companies consistently increasing their dividend payments to shareholders for 25 consecutive years. Wait a minute, aristocrats, champions? Yeah, they're different rules. Okay, the dividend aristocrats, they're real snobby and have really strict rules to be a dividend aristocrat. But still, 25 years. Dividend champions, less rules, but still 25 years of increased dividends. Bringing up the tail end, we have the dividend contenders. 300 companies consistently increasing their dividend payments to their shareholders, but for 10 to 24 years. So not all the contenders make the list. Now, every once in a while, I will let one of the contenders slip in, depending on who it is. Because you can ask yourself, do I like this company? Every once in a while, I will make an exception for some. Now, I'm going to tell you what the exceptions are. And list number 5. Now, this one would be like a no-brainer for everyone. You ready? If it's on Warren Buffett's list, then I'm going to look at it. Now, here's the thing. There are a lot of stocks on Warren Buffett's list that aren't on my list. Apple is not on my personal list, but it's on Warren Buffett's list. Siri, Paramount, Mara, there's a few other ones. But there's a few companies, and there are a few very good traders that I will take a look at some of their stocks, if everything works. But for the most part, my rules are pretty simple. 20 years of consistent profits and weekly options. All right, so now let's pick on Tony, Scalp and Bang, IONQ. Tony, are you ready for this? IONQ. IONQ. Never heard of it. Oh, look at that. It does have weekly options. Okay, interesting, but look at this. Last week it was, a couple months ago, it was around $7 or $8. Now it's at 49. Well, awesome. Let's see, Tony, how wonderful they are at increasing their dividends every single year. Because the reason why I like dividend stocks is pretty simple if you can't figure it out. Number one, when the shit hits the fan and the stock drops, what are you collecting? If it's not a dividend stock, then you're not collecting anything. Okay, so I'm going to go here. IONQ. And hit that. And now, if you guys didn't know, this screen behind me, this screen here is live on YouTube. If you can't see the numbers, if it's too bright, okay, I understand it's bright. If anyone can tell me how to convert this to night vision, so it's black background with white lettering, I'd love to hear it. And don't tell me to go into my settings and hit the night view. It doesn't work for this website, okay? I know that part, okay? So yeah, I have other websites, well, all black with white lettering, but for some strange reason, Yahoo Finance, black lettering, white background, okay? All right, IONQ. Let's take a look at the dividends. Holy shit! There are no dividends in the selected time period. Tony, why the hell would you ask me to take a look at a stock that has no dividends? The name of this show is Dividend Stock Talk. IONQ is not a dividend stock. Why are we wasting our time with it, Tony? Now, I don't mean to pick on you personally. If it was Fred, I'd be doing the same thing to him. Okay, a company has to have, okay, it is dividend investing for weekly cash flow. There are no dividends in the selected time period. IONQ is a no. That's a no. Okay? No dividends, no thank you. No options, no thank you. The rules are pretty simple. Now, I have no control over it, nor do I want to have any control over what you do with your money. You are perfectly fine to do whatever you want. But for me, I am very strict with what I do. I'm 60 years old. I'm retired. Okay, I've been working since 1973. You can convince yourself all you want, but you'll be lying to yourself. At some point in time, you will retire. And you have 3 opportunities. Opportunity number 1, you age out. We all know what that is. You go into work one day and the boss says, hey, Tony, come here. Here. I've learned this a long time. Tony, we got to talk. Trust me, nothing ever comes good after Tony, we got to talk. Okay, age out, which means you're too old to work. You do not need to be here anymore. Stay home, go fishing, watch the grass grow, hang out with the grandchildren. You are too old, stay home. We all know what that means. You are too old to work, you need to stay home. That's number 1. Number 2, this is everybody's favorite and everybody dreams about this all the time. Where you walk into the work one day and you say, you can take this job and shove it. I ain't working here no more. Means you get the opportunity to have enough money coming in from your investments or from your assets or from some inheritance that you don't need to work if you don't want to. That's called walking out. First one, age out. Number 2, walk out. The third one, you're not going to like it. Yep, Kim, we're going to get to seasonality in a little bit. Number 3, ways of retiring. You ready for this one? Toe tag. Means you die on your way to work or you die on your way coming home from work. It means you have no golden years. You don't get to reap the benefits of all your 30, 40, 50 years of working life. And trust me, I have a lot of friends. My best buddy, Billy, he was one of the best men at my wedding. He was one of the groomsmen at my wedding. He is no longer here because he died on his way to work. His brother, Nicholas, he was younger. Your younger brother's not supposed to die before you. Nicholas died before him. Okay? It happens. You got 3 opportunities to retire. You age out, you walk out, or you toe tag out. And we're all going to get there at some point in time. The reason why I'm here is to share with you what I do. I have my little nest egg. I make 1% every single week. 1% every single week comes to over 50% per year. Okay? That's for me. I'm just going to show you what I do. If you want to do the same thing, that's up to you. I do not make recommendations. I do not give advice. I will take a look at stocks that you name, that you give me something to look at. I'll take a look at it and I'll give you my opinion. Next on the list, B-Rad Daddy wants to take a look at Walgreens. We all know who Walgreens is. There's a Walgreens in almost every major city in the United States. As a matter of fact, there's 8,700 stores worldwide. Yes, you probably heard the bad news about Walgreens where they're going to close off 25% of the stores. Well, here's the reason why. And some of you Democrats aren't going to like this because it's all your damn fault. And yes, I can say that because the Democrats who are in power for the last 4 years decided they do not want to prosecute theft under $900. So who suffers? We do, the public, because you have some people walk into a store, grab some shit, walk on out, and they don't get prosecuted because they don't want to prosecute crime under $900. Perfectly legal to walk into a store, grab some shit, walk out. Fine, sue me, take me to court. No, they don't want to. It's the Democrats. Don't give me no shit. I really honestly don't care who sits in the big seat. Okay? But you cannot argue the fact. You can argue all you want, but you're going to be wrong because we didn't have this problem when the Republicans were in office. I heard somewhere that Walgreens might try to go public. You're absolutely right. There has been an offer put on the table for Walgreens. I have no idea what's going on with it, but let's take a look at the numbers. Let's take a look at the opportunity. Now, to let you know, I've done a lot of buying and selling with Walgreens all last year because I love the numbers. Now, you may look at it and say, hey, the high's way up here, the low's down here. Didn't you lose money? No, I'm not a long-term buyer. I buy on a Monday, I'm out on a Friday. Sycamore Private Equity Firm. John, thank you for that. I have no idea what's going on with it, but I'm not a long-term buyer. See, the high is 26. The low is around 8. How would you feel if you have a long-term investment that you're into it at 26, now it's down to 28? That's a huge drop. But I don't look at it that way. I look at what is it now. So I'm going to explain it to you now because I actually have some Walgreens that I just bought recently. Watch and you'll see the numbers. You'll say, holy shit, that's a good deal. Watch and see as it unfolds. As it unfolds, it is all unto you. Something like that. I forget. All right, so anyway, here's the high, here's the low, here's where it was, here's where, look at the direction. Down, sideways. It's currently at 9.82. Okay? I know high school kids can afford $9.82 per share. Okay, so at 9.82, the closest strike price, the covered call, that's the only strategy I'm going to be showing you. You buy the stock, you sell the option, you make whatever the premium is. And the premium here at 9.82, the closest one's going to be the 10. The 10 is going for, holy shit, 32. That can't be right. Just to let you know, okay, these numbers here, okay, the market is closed now, so the numbers aren't changing. But during market hours, these numbers will constantly change. Change. But the math never changes. The equation never changes. What am I buying it for? What's the closest strike price? What is the premium? Is that 1% or more? The easiest way to figure out what 1% is, you ready for this? So simple. 982. What is 1% of 982? Well, 1% of 982 is 9. Okay, $9. 9 is 1% of 90. So 982, 1% is 9 cents. Okay, if it's going for 32 cents, well, that is more than 3%. That can't be right. It could be, don't get me wrong, it could be, but 3% on Walgreens for 3 days? Where is it? Right here. 10 January 25, that's this Friday. Okay, 3 days. 32, that's 3%. But look at next week's. Next week's 10 is going for 40 cents. That is over 4%. That's 2% a week. Well, I like those numbers. Let's actually do a trade to see what it looks like so you understand what's going on. You either say, this is important, you ready? It either makes sense or it doesn't. That's a big question. That's out of everything you learned tonight, everything you see tonight, one question I ask you to keep on the forefront of your mind. And that is, are you ready for this? Does it make sense? That's it. Okay? It either makes sense or it doesn't make sense. Number one question, keep in your mind, does it make sense? Okay, Vincent, I see the question you have over there. Hold on a second. Oh, sent a request to be in your live video. Okay, Vincent, I would invite you to be on live with the video with me, but I don't know anything about you. Okay, anytime I invite someone to be on live with me, I'd like to have a conversation with first, because I honestly do not want to talk about Amway. I do not want to talk about cryptocurrency. I do not want to talk about what's happening overseas. I don't want to talk about anything but dividend investing for weekly cash flow. So if you really want to be on live with me here with the rest of the audience, send me your phone number. I will call you. We'll have a conversation. And then if you want to come on live, you're more than welcome. Okay? So I appreciate that you want to come on and you want to share whatever it is you want to share. But before you do, I want to make sure I know what the hell you're talking about. Okay? All right, so play at your own risk. Can you quickly go over the reasons why we chose dividend companies when we are doing weekly options? Absolutely. Oh, that's a freaking awesome question. So before we take a look at Walgreens, okay, play at your own risk. That's his name. Play at your own risk. Wants to know why are we looking at dividend stocks? Well, besides the obvious, that a dividend stock is a company that shares the profits with their investors, which means Absolute worst case scenario, when the shit hits the fan. It's not an if, it is a when. Because stocks go up, stocks go down. When the stock goes down with a non-dividend paying stock, what are you collecting? Are you ready for this? Nothing. If the company is not paying a dividend, not sharing its option, not sharing its profits, when the stock price goes down, you are getting nothing. All right. If and when the stock price drops, every 90 days I get a dividend payment. Every year that dividend payment consistently increases. Now, the reason why I want dividend stocks is because I'm too damn lazy. I'm admitting that. I'm too damn lazy to read every single annual report, every single earnings report of every company I want to look at. To simplify it, okay? Number one, this trading strategy was created for a 9-year-old, so it had to be simple. Can I picture my 9-year-old reading an earnings report on every single company? No, I cannot. But here's a trick, and it's a simple one. And it's like, oh shit, why didn't I think of that? If the company is profitable and they share their profits with their investors in the form of a dividend, well, the dividend is going to increase. And if the dividend increases every single year for more than 2 consecutive decades, that means 20 consecutive years, that means the company's consistently profitable. That's the only ones I want to look at. But that's me. But here's another reason why I only like dividend stocks. Now, this is going to take a little bit of explaining, and it might be a little challenging for you to understand, but go with the flow here for a second. Behind me, this is what is called an EX dividend calendar. The date, January 2025. Today, right here, the 7th. All these little green dots represents dividend stock companies that are ready to pay a dividend. If you want to collect the dividend, you have to buy it before the little green dot. To give you an example. Okay, Lowe's, L-O-W, January 22nd, they're paying their dividend. The dividend is $1.15 per share. Wonderful, great. Do I care? Not really, but yet again I do. Here's why. Are you ready? January 22nd is when they're paying their dividend. Now, I've been trading Lowe's every single year on the second week of the quarter. Every single quarter. Why? Because on the 4th week of every quarter, now there's 13 weeks in a quarter, quarter 1, January, February, March, quarter 2, April, May, June, quarter 3, July, August, September, quarter 4, October, November, December. Okay? 4 quarters. Each quarter has 13 weeks. Week 1, week 2, week 3, week 4. Lows. Week 4, every single quarter. Okay, so if Lowe's is fourth week every quarter, the stock on a dividend stock, specifically Lowe's, has a tendency to go up in value just before they pay out their dividend. So stocks move up. Well, stocks move up, down, or whatever for 2 reasons and 2 reasons only. Are you ready? Reason number 1 is called an unknown reason. It means we have no idea why it went up or why it went down. But once it goes up or goes down, we find out afterwards. It means we can't plan for it. I'll give you a couple examples. When Bill Gates retired, the stock on Microsoft went down. When Steve Jobs died, the stock for Apple went down. Actually, last year, when Apple got sued in a big, huge lawsuit over in Europe, they had to pay a big, huge fine. Apple stock went down. ExxonMobil went down really bad when the Exxon Valdez crashed in the Northwest. British Petroleum crashed when they sprung a leak in the middle of the Gulf. Did we know they were coming? No, we did not. What else don't we know? Floods, hurricanes, storms, tornadoes, earthquakes. We have no idea when they're coming, but they do affect some of the stocks. That is what's called an unknown reason. You can't plan for those. You can only react to them. Okay? Second, a known event means we know something is coming. Well, what's that? Earnings report. We know when earnings reports are coming. I don't particularly like them because I've seen positive earnings reports and the stocks go down. I've seen negative earnings reports and the stocks go up. I don't like those either. What else do we know? We know seasonality. Winter, spring, summer, fall. Nobody puts their air conditioning on in December. Why? Because it doesn't make sense. Nobody puts their heater on in July because it doesn't make sense. Seasonality, winter, spring, summer, fall. The temperature outside affects certain companies in a certain way. Also, the beginning of the year. Why does Weight Watchers stock go up? I don't want to say it, but we all know it. Okay? Hershey stock goes up in the first week of February. Well, why? Well, you got Valentine's Day in the middle of February. April, you got Easter, the two biggest chocolate holidays of the year. Why do you think Hershey goes up in the first week of February? Then you have oil stocks going up in March and April. Why? Because we all turn our heaters on in October, November, December. So what happens in March and April? The oil tanks are empty and they got to order oil. Everybody's ordering oil at the same time in March and April. Now, in June, July, August, September, you can fill up, but you don't have to. But once you turn your heater on in November and December, you're empty in March and April, so you got no choice but to fill up. Okay, oil stocks go up in March and April. It's called seasonality. It just happens. What else happens predictably every single year? Dividends. Dividends pay every 90 days. Lowe's, Clorox, Caterpillar, Pfizer, General Dynamics, MasterCard, Comcast, Cardinal Health, all these companies, every 90 days. Every 90 days they pay a dividend. Great. Well, every 90 days, I look at Lowe's. And if Lowe's is going to go up in value, hell yeah, I want to jump in and take advantage of that. By knowing when a stock is going to move up, you know something most people don't. That's why I like dividend stocks, specifically those that are consistently profitable. All right, let's go back to Walgreens. So we'll figure out what's going on there. I get sidetracked once in a while. I admit I have ADHD, whatever you want to call that. I get sidetracked quite easily. All right, Walgreens. Here's the high, here's the low, here's where it was, here's where it is. Look at the direction. Down, sideways, $9.94. Currently, I could buy it at $9.94, sell the 10s, 32 cents. That's crazy. That's 3% or more. Or next week, the 10s are going for 41. That's over 4%. Hell yeah, I like Walgreens. I actually have some. But let's continue checking out the numbers. Okay, so we've seen the high, we've seen the low. Look at the last 90 days. Now, when I'm looking at charts, I look at 4 of them. Okay, the 1-year chart, the 90-day chart, the 30-day chart, and then the seasonality chart. Let's go through all 4 of them. We just saw the 1-year chart. Here's the 90-day. The 90-day, I'm looking for the exact same thing. The high, the low, where was it, where is it, and what direction. Here, I'm looking for a pattern. Okay, up, down, up. Simple. I can get my 4-year-old grandson, say, buddy, put your finger on there and trace where it's going. Oh, Papa G, it's going up. It's going down. It's going up. It's going down. It's going up. It's actually that simple. When I say adults have a tendency to make this more complicated than it needs to be, well, it's true. Think about it. If you were a 3rd grader, what direction is it going? Up. What's it going now? Down. It's not that difficult. Stop making it complicated. All right, 30 days. Okay, here's the last 30 days. Again, pretty simple. Up, down, up. It's going up. It's in an uptrend. Okay? You can argue it if you want, but it's kind of pointless because everybody can see it. Up, down, up. All right. So if it's going on the upside, great. I want to take advantage of it. But wait. Hold on. What does it normally do this time of year? For that, we need the seasonality chart. Now, the seasonality chart right here, if you don't know what it is, here we go. You ready? All the way to the left, January 1st. All the way to the right, December 31st. Now, the blue line, really tiny because there's only, 3 days in January so far? Right there. The red line is how the stock normally reacts over a 10-year period throughout the year. So normally, this is what it does. It goes down and then she goes up. I want to zoom in and take a look at just the month of January. So I go right to here, January 31st to January 1st, okay? This is the month of January. What does that look like? Well, from here where we are, she's gonna go up a tiny bit and just go sideways. Before the end of January, she starts going down just a tiny bit. Well, that kind of makes sense to me. But here's the interesting thing about the seasonality chart. I can change it to be 3 years, 5 years, 10 years, or 20 years. Well, 3 and 5 years is not enough time, in my opinion, for me. 20 years, way too much time. Total different world 20 years ago. Now, 10 years gives me a good idea of consistency. Because if it's done in 10 years in a row, there's a good probability that it'll do it again. All right, so let's get back out of there. Those are the charts I like to look at. No big surprises for Walgreens. So it all looks good. So let's actually do a Walgreens trade right here, right now, so you can see how I do it. And then remember that one question I asked you to think about and see, does it make sense? All right, so number one, the 1 year chart. Okay, 90-day chart, great. 30-day chart, wonderful. Seasonality, great. Everything's pointing in that direction. The numbers, it's actually giving me more than 1%. That's what I'm looking for. So let's do one. Yeah. All right, here we go. I'm going to change this first, right here, because right now it says single. That's an option strategy, just a single. So I'm going to explain it as we go along. Click on that, and I'm going to change it to a covered call. What does that mean? That means I'm going to buy the stock for $9.94. It says right there, $9.94. I'm going to sell somebody else the right to buy it from me at $10. That's the closest strike price. The strike price is a predetermined price. Now, an option is the right, not the obligation, to buy something at a certain price by a certain date. The strike price is the certain price. The expiration date is the certain date. So, the one I'm about to show you is I'm going to buy the $10, I'm going to buy it at $9.94. I'm going to sell somebody the rights to buy it from me. It means they don't have to if they don't want to. It's kind of like having a used car on the side of the yard. You take it, you push it out on the front lawn, you slap a for sale sign on it. Great, you own it, you have the right to sell it. So Tom down the street comes by and says, hey, I like your car, I'd like to buy it. Well, let me give you a couple of $100, hold it for me until Friday. If I come back on Friday, I'm going to pick up the car. Who do we got? Vincent? Jerry Lee. What's happening, Jerry? If he comes back on Friday, he'll pay you for the car. If he doesn't come back on Friday, you get to keep that money and you get to sell it again to somebody else next week. It's 1 week at a time. That's why I say weekly options are a must. Okay? So, buying it at $9.94, I'm selling it at $10. I'm picking up whatever premium's going to be. Let's do this. You ready? Here's the 10. I'm going to buy it right there. Okay, here's the order. I'm going to change it to just one contract. Okay, and I'm going to do it at the market price. What does that mean? That means this is going to fill first thing in the morning at the market open. Okay, if you put an order in the day before or before the market opens, depending on the order you put in. If it is a market order, that means it will fill first thing in the morning. If you set a limit order, I mean, this is all I want to pay, no more, no less, well, then it will fill once the market maker decides to fill it. But a market price means it fills instantaneously first thing in the morning. Okay, let me go through the numbers. Hold on. My ginger tea with honey. It's good for my throat because I'm not used to talking so much. Usually when I'm in a conversation, there's someone else to talk to. But here, I'm just talking to a bunch of cameras. Anyway, here we go. Buy one covered call WBA, Walgreens 100s. That's the weekly, which means it's going to expire this week. 10 January 25. 10th of January 2025. That's this coming Friday. The $10 call strike against the Walgreens stock at the market to open. That's the order. Buy one covered call, Walgreens, 10 January 25, 10 call WBA, market to open. That's the order. So you call your broker, this is the order I want. All right, anyway, there's a couple numbers I want to share with you. Right underneath that is the break even. 933. So if the stock closes at 9:33 or higher on Friday at 3:59 p.m., because at 4 o'clock the market's closed, okay? 3:59 p.m. Anything over $9.33 is going to be a profit. Preferably, I would like it to be over 10 because I'm selling the $10 option. But my break even is 9.33. So if the stock goes up from where it is now, remember where it is now? 9.94, okay? If it goes up, I'm profitable. If it stays the same, I'm still profitable, not as much as I like to. But it could come down a little bit, and I'm still profitable as long as it is above 9.33 on Friday afternoon. Okay. Next number down is the maximum profit per contract. All right, now remember when I say simple, safe, predictable? Well, this is one of the few trades that I know exactly what I'm going to make before I make it. So again, that comes under the does it make sense category. Does it make sense? Okay. This is the profit right here, $66.50 for each contract. One contract, $66.50. Two contracts, $133. Off the top of my head. Okay. 4 contracts, just do the math, it's pretty simple. One contract is $66.50. Now, I'm going to bring up my calculator for this next one. You ready? Let's clear this out of here. Now, the reason why I'm bringing up my calculator is, what is my rate of return? Well, we know what the profit's going to be, $66.50. So let's put my $66.50 into my calculator. Now, that's for each contract. Now, what is the contract costing me? Well, the cost of the trade plus commission. That's the next line right here. Cost of trade plus commission, $934. Well, that may not sound right, but let me finish. Divided by 934 and 15 cents. That's going to equal, you ready for this? I don't know if you're ready for this. 7.1% for 3 days. That doesn't make sense. But those are the numbers that are here. Okay? Now, when you wake up in the morning at 9:30 a.m. Eastern Standard Time, all those numbers are going to change. But the math problem's not going to change. What's the current stock price? What can I buy it for? What's the closest strike price? What can I sell it for? What is the premium I'm going to collect once I sell it? Well, that is your profit. And you divide that by how much it's going to cost. Well, the profit here, $66.50. What is it going to cost me for one contract? $9.34. But wait, it gets better. It really does. Watch this. Now, you have the opportunity to have what's called a margin account. Now, some of you might understand that, some of you might not. Now, I implore you not to do a margin account until you understand the risks and rewards come along with it. Okay? Before you can apply for a margin account, you have to read a certain book. It's called Standardized Risks of Options, something like that. Standardized Risks. Anyway, you have to qualify for an option account, and you have to qualify for a margin account. All right, so let's do it. If it was a margin account, it actually gives you the number right here. Okay, buying power effect, $450. Well, because this is a margin account. Okay. Now, the longer you have a margin account, the more experience you have, the better rates they give you. So take a look at this one. Okay. Now, the profit is still the exact same. $66.50 per contract. Okay. So we're going to divide it by how much is it going to cost me on margin money? $450 right there. $450. So I'm going to divide it by 450, and this is going to be totally crazy. Okay, divided by $450. Okay, look what my return for the week is. 14.7%. Okay, that's crazy. 14% for 3 days, that's nuts. And it's one of the safest trading strategies there is. The reason why I say that. The safest trading strategy is you buy the stock. That's it. But there's no profitability there until the stock goes up. Well, this one, I'm buying it for the current price, $9.94. I'm selling it for $10, or I'm selling the rights for someone to buy it from me at $10. And I'm collecting for each contract $66.50. Well, all cash account, it's 7%. Margin account, it's 14%. That's nuts. Normally, it's usually 1 or 2% every week. Normally. Okay, every once in a while, you'll get one like this. Now, we did US Steel a couple of weeks ago. That was freaking nuts also. Okay, a couple of months ago, we did Harley Davidson. And that was 3% every single week. Which we did 3 weeks in a row. That's 9% in 3 weeks for a simple, safe, consistent trading strategy. You're buying the stock. Remember, never buy something you don't understand. I understand who Walgreens is. There's a Walgreens in every major city. Yep, they're closing down 25% of the store due to the current administration wanting to prosecute theft. Perfectly understandable. Okay? However, here, this week, the numbers that are posted online, nuts. Got it. Love it. Wonderful. Let's move on to the next one. Just to let you know, I already do own some Walgreens. Yeah, I love the numbers. I have been trading Walgreens for quite a while. And for those of you that are new here and don't know, let's take a quick gander at this. Are you ready? Here it comes. Here it comes. Here it comes. Right there. Okay. Here is my website. I show you each and every single trade I do every single week. Okay? Right here. Now, for those of you who don't know what the red and green means I bought something. Red means I sold something. It's not positive, negative, okay? It's I sold these, I bought those. That's all that means, okay? Now, CVS, Halliburton, Nordstrom's, Riley, Mara, Walgreens, Kohl's, Pfizer. They're all right there. Over here, you have the timestamps. What's the timestamp? Is exactly when I did the trade. 10/7/24 093003. What does that mean? Well, that's 9:30. 9:30 in the morning in 3 seconds. 3 seconds after the market opened, that order got filled. 9:30:03. 9:30. Not 9:31, not 9:32. 9:30:03. 3 seconds after the market opened, I did this trade right here. Well, let's take a look at it. I bought 4 contracts of CVS, 58s. I sold 4 contracts, CVS, 58. I picked up 52 cents per share, blah, 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 a couple $100. It's actually not that difficult. Okay, so every single trade I did for the last year is right here. Look at some of the rates of return. 2.3, 1.6, that one hasn't been done yet. 4.3, 8.1, that was a good week. Now, do I make 1% every single week? No, I don't. Look at this week right here. 0.72. I didn't make 1% this week. But look at the previous week. 1.4, 2.8, 4.05, 2.85, 3.36. So I've been doing this for a very long time. The video I showed you earlier was a video of me and my daughter 15 years ago doing the exact same thing. Now, for those of you that are new here, because our audience seemed to have doubled,
Hi, I'm Tracy, and being part of my internet website club thingy, which my dad doesn't let me call that,
okay.
But I do. Being part.
January, February, March,
And there's me.
12. You can buy 12 different companies for the whole year and still make over 20% a year. That is easy. 1 trade a month. Who can't do 1 trade a month? But
1 trade a month, 20% a year. How can you go wrong? I said that, what was that, 12 years ago, 15 years ago? 12 years ago. 12 years ago doing the exact same thing that I'm doing now. Okay, it's really not that difficult. It was created for my 9-year-old daughter. The video, I have to admit, the video you were seeing, she's 11 at that time. Because we didn't have the ability to record. We didn't really know what we were doing. 15 years ago, when she was 9. I think she's 20, she's gonna be 26 this year. Holy shit. All right, anyway. Let's get back to where we were. All right, so I like Walgreens. I own some Walgreens. Yep, I consistently trade Walgreens. The reason being, okay, I don't buy and hold long term. I jump in, I grab my 1 or 2%, I jump out. That simple. I don't hold on to anything. So let's go back to the questions and see what else you guys want to take a look at. But let me go back to here. Here we go. Now, as I said earlier, I will answer each and every question. You will ask a question, it will pop up. I won't see it until the questions before yours get answered. Okay, say IONQ, we already said hell no to that one. all the way back to the beginning. Where are we? Where are we? Where are we? Where are we? All right. Calvin Hill's here again. Way to go, Calvin. Speedo. I'll just call you Speedo. Thanks for the economics presentation. Quick question. How can I get this platform or setup? Okay, Speedo, this platform is called Think or Swim. I've been using this platform for 2 decades. Now, I started using it when Tom Sosnos owned it. He's the one who created it over 20 years ago. He sold it to TD Ameritrade, which I moved my account to TD Ameritrade, and then TD Ameritrade got bought out by Charles Schwab. I moved my accounts to Charles Schwab. So now I'm still using the exact same platform that I've been using for the 20 years because I have not found another platform that has everything that I want as a professional trader. I say that lightly because I'm not really a professional trader. To be a professional trader, you have to make at least 4 trades a day. I don't make 4 trades a day. I make all my trades on Monday and Friday. Very rarely will I buy something on a Tuesday, Wednesday, or Thursday. Okay, I'm strictly a by the numbers kind of guy. Okay, so Speedo, Think or Swim, you can download it for free, but after a while you will have to call Charles Schwab and explain to him why they wanted to do it longer. George, thank you for that. Water King, how you doing? Crisco Adi? Wait a minute. Adium? Nice name. Adium. Rand, what's happening? Rich Bruner is in the house. All right, Dark Matter, what's happening? Ambassador of L. Ooh, cool. Carlo, what's happening, Carlo? Darsoka. Okay. Let's keep on going, keep going. Taxman America. Bet you everybody loves that name. Cena, Rambo, Jimbo, Mark. Wow, where's the questions, guys? Questions. Brittany, how you doing? Pink Rose, Elena, Twin, Pulls, Nape. Uh-oh. See, apparently, Jake and Pablo were not listening because now they want me to look at QDTE. Hell no. PLTR, double hell no. No dividends, no thank you. No consistent profit, no thank you. QDTE has not been in business for 20 consecutive years. No. PLTR, no dividends, no thank you. All right? RGTI and QBTS, please and let know about it. All right. Econometric. Interesting name. Now, I'm going to let you know right now, both of those are going to be a no, but let's take a look so I can say no as we pull it up. Okay, RGTI. Whoops, so helps if I do this. RGTI. Now, when I say I want a consistent 1% per week from a company that has weekly options and, ready, and 2 decades of consistent profits. RGTI. Well, it has weekly options, okay, but it was at $1 a couple of months ago. Now it's at 18. How can that possibly have 20 years of increased dividends? Well, let's take a look. Over here to Yahoo Finance. Now, I tell everybody at some point in time, you're going to have to find a financial website where you can get your information from. So, RGTI, how wonderful are they at paying their dividends? There are no dividends in the time period selected. Dude, that is a no. Hell no. What are you thinking? Seriously? It is a dividend stock channel. The name of the channel is called Dividend Investing, or wait a minute, Dividend Stock Talk. Dividend Investing for Weekly Cash Flow. RGTI has no dividends. So why are we looking at it? The same thing with QBTS. It's really not that difficult. No dividends, no thank you. No weekly options, no thank you. Okay, so DH wants to take a look at Abbott Labs. Now, Abbott Labs is a dividend king. Ali Sahid, I have no idea who you are. If I have no idea who you are, I'm not going to invite you onto the channel. Now, every once in a while you hear me say that because somebody's asking to co-host with me. I have no problem having a co-host, but I'm not going to do a co-host that I've never heard of, okay? Because I have no idea what you want to talk about. Now, I want to talk about dividend stocks and investing. I have no idea. So anytime you hear me say that, okay, yeah. You want to talk? We'll chat. DH, Abbott Labs. Okay, I like Abbott Labs. Dividend king, which means they've consistently increased their dividends for more than 20 consecutive years. And they have weekly options. So Abbott Labs is a yes. But is it a yes for this week? Well, let's take a look at the numbers. First thing, always, 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 is the 1 year chart first. Where's the high? Where's the low? Where was it a year ago? Where is it now? What direction? Up, down, up, down, up. Okay, easy. Now let's take a look at the numbers. If I'm going to buy it, what can I expect to make this week? All right, currently it's at 113.84. Now we all know 113.84, the closest strike price is going to be 114. Well, 114 for this week, no. We only have 3 days left. You can't really expect 1% in 3 days. But next week, the 114s are going from 97 cents to 122. Now, in between that is 114. So, yes, 1% is possible. All right, so let's take a look. The numbers are okay. So let's take a look at the chart. Now, the chart is going to tell me, is it the right time to buy? The first one we look at is the 1 year. Well, look at it. Here's the high, here's the low, here's where it is now. Kind of in between. It looks okay. Not super duper, but okay. So let's take a closer look. Okay, the high of the year, 121.64. That was back at the beginning of March of last year. The low of the year, the middle of July of last year, and that was 99.61. That's the 1 year chart. Here's the 90-day chart, or the last 3 months. The high, the low, where was it, where is it? Not that difficult. You ready? Down, up, down, up, down, up, down, up, down, up. Okay, so on the 90-day chart, it is in an upward trend. Great, I love it. Looking for a pattern. Look at how nicely it moves. Okay, you don't have to know specifics. You don't have to get a microscope to figure it out. Just take your finger. Up, down, so on and so forth. Okay, let's take a close look. Last 90 days, right there. Last 90 days, same thing. High, a low, where was it, where is it, what's the direction? Down, up, down, up. Not that difficult. Now, what do you think it's going next? Well, look where the high is. The high is here, 116, way up here. Okay, way up here. Where's the low? Right here, way down here. Where is it now? It's kind of like in the middle, but it's going to the upside, which means you can only have one 30-day high and you can only have one 30-day low. 30-day high was here, 30-day low is here. She went up, a little bit of profit taken, brought it back down. Now she's going up again. Great, she's going up again. That tells you right there, where's it going? It's going up again. All right, so let's take a look at the seasonality chart. The seasonality chart tells me what does it normally do for this time of year. Well, we are already seen this. We want to take a look at just January. Say just January is right here. Okay, just January. Look at that, sideways. No big surprises. Now, you're going to see no big surprises a lot, but every once in a while, you'll see something totally crazy where a stock has a tendency to jump up quick or drop down quick. That's why we look at seasonality. What does it normally do? Well, this company, normally business as usual. Why? Well, it's a 100-year-old company. No big surprises. Business as usual. Come into work. Hey, what are we doing today? Same thing we did yesterday. All right, so coming next week. What are we doing this week? Same thing we did last week. Companies do the same things over and over and over, especially the companies that are over 100 years old. Okay, so Abbott Labs, everything looks good. Let's take a closer look at the numbers. Let's get out of here. First, I want to go back to that. Then I want to squeeze way over here. So, at this moment in time, tomorrow morning. Now, this never changes. What can I buy it for? What can I buy it for? What can I sell it for? What am I collecting? You think that's funny? Hey, what are we doing today? Same thing we did yesterday. Okay, you ever work at McDonald's? Hey, what are we doing today? We're flipping burgers. What are we going to do tomorrow? We're flipping burgers. What are we doing 3 weeks from today? We're flipping burgers. Same thing. Nothing else changes. Okay? I like that. Consistency. Profitability. It makes sense. Okay? That's why I asked you. Number one question you take away from this is, does it make sense? That's it. If it doesn't make sense, don't do it. Doug! try and take over the world. What are we doing today? We're trying to take over the world. Oh, remember Ren and Stimpy? What are we doing? We're trying to take over the world. All right. Deep sea bowling. What's happening? Cool beans. All right. So, number one question, does it make sense? Number two, do I like this company? Number three, do I like this company at this current price? Question number four, am I willing to buy this company and hold on to it until it hits my target? The nice thing about that is you can do a option trade, a covered call option trade every 7 days. And think about it, 1% every 7 days. If you had a $50,000 account, that's $500 every single week for 5 minutes of work. Great. What did I buy it at? Great. What's it at now? What can I sell it for? Wonderful. I'm making 1%. Great. Hold on to it until it hits your target. Once it hits your target, great. Let's move on to the next company. Remember, the next company. Okay? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. There's a few others thrown in there too. But out of the 9,800 and whatever, there's only about 300 companies that are consistently profitable, that have weekly options. Those are the only 300 that I look at. Now think about it. 90 days per quarter. 90 days per quarter. Okay, 22 trading days every month, 13 weeks. Week number 1 of the first quarter looks the exact same as week number 1 of the second quarter, which looks the exact same as week number 1 of the third quarter, and looks the exact same as week number 1 of the fourth quarter. Well, this is repetitive. This is boring. This is monotonous. This is great. This is 1% a week. No thrills. If you're looking for thrills, if you're looking for next shiny object, you're in the wrong place. This is boring as hell. This is repetitive. This is monotonous. This is consistent. But it is profitable. And it's only 1%. How easy is 1%? Think about it. If the stock, let's zoom into this for a second. Okay. Here's the 30-day chart. Okay. Abbott Labs was at 116 a month ago. From 116, it dropped down to 111. That's a $5 drop. $5. That's it. $5 on a $116 stock is 5%. Not much, but I'm only looking for 1%. That's going backwards. Let's go this way. 111 to 116. 111 to 116. It's only $5. $5 on a 111. It's just a little bit below 5%. Well, I'm only looking for 1. I'm buying it at 112 and then I'm selling it at 112. I'm not looking for buying it here and having it shoot up. No. I could honestly care less. But what I do care about is consistent profitability. And what direction is it going? Well, it's pretty plain to see. Down, up, down, up. Now, it's going up very slowly. I'm okay with that. I'm only looking for 1%. 1% every week is over 50% per year. All right, so we got more questions. Let's go some more questions. Ready? Let me go. What else we got here? La, 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 la. Oh, my goodness. Ricky! One con is 100 shares of stock. One contract is 100 shares of stock. Exactly. Becca Makawa, how are you today? All right, kiss, 19924. Well, hello to you too. So what do you consider an average good percentage before selling? 1%. Andrea! James, is it easier to roll a stock in Schwab or Think or Swim to understand the numbers? I like Think or Swim. I've been to Schwab. All right, now, Andrea, I told you this before. I have written 14 books. One of the books is Choosing the Right Trading Platform. Now, you've got to understand what it is you're looking for. Okay, whatever it is you're looking to do, you need to find a place. Oh, do you remember Cheers? Everybody wants a place where everybody knows your name. Everybody knows your name. Yeah. So you want to go someplace where you know everything, where everything is simple, everything is easy, everything flows. When I trade, this is what I'm looking at. Okay, this is what I'm looking at. My positions, I right click and I hit view trades. Okay, so I'm looking at the chart right here I'm looking at the trade. I bought at 35, I sold at 31, I collected this, and here's the trade up here. I see everything I need to see in order to make my decisions. All right? And that works for me. Now, the book I wrote 13 or 14, 15 years ago, Choosing the Right Trading Platform, I looked at, I think, 50 different trading platforms 15 years ago when I wrote the book. This is the one that I chose because it has everything I want. Now, I've looked at Charles Schwab's trading account. I did TD Ameritrade's trading account, E-Trade, Just to Trade. What else did I use? Interactive Brokers. I use a lot of different trading accounts. For me, it was complicated at first, but as soon as you understand it and as soon as you set it up to the way that you want it, it flows easy. Here's the chart. This is what I'm looking for. Now, what else do I want to look at? Well, I want to look at the seasonality chart. Well, it's right here. 1 click, 2 clicks. It tells me what does the stock normally do. Normally, okay? You have to decide what it is you are looking for. So I want simplicity. I want consistency. I want profitability. And I want safety. This is the easiest one for me. Now, I also trade on Robinhood. Robinhood is not as simple because I have to change screens. I have it on my phone. All right. 5 years CAGR. Float YYG. What is 5 years CAGR? I have no idea what that means. Bob, hello. Checo Rodriguez. ¿Qué pasa, amigo? ¿Cómo está? I'm just here to learn. Very interesting. I'm glad you like it. Okay, B-Man. Seriously, you want me to look at QQQI? Did you not hear the part of I want 20 years of consistent profitability? QQQI does not have that. Okay, Alenish Bokar. JEPQ. No, not consistently profitable. Alice, SNCI? What the heck is that? Okay, Queen Cheetah. Just joined not long ago. How much does a person need to start trading? Okay, Queen Cheetah. It's different for everyone. Now, when I started with 12,000. That was back in the 90s. My grandson starts with $50. $50. Okay? I know a bunch of people that started with 1,200. I know a few people that started with 600 or 700. I know a couple of people that have a couple of million. Everybody is different. Okay, there's a couple hundred people here. I can almost guarantee with 90% or higher consistency, no two of us has the exact same amount to start out with. So what you choose to start with is up to you. I always encourage people, paper trade first. Learn the basics. Make your mistakes in a monopoly game. Same thing, okay? Paper trading means it's not real money. Let me show you quickly. This account here, okay? Paper trading. This one here, real. This one here, real. Okay, I have 7 different accounts now. Shit, 7. I share 3 of them with you guys. One of them is a paper trading account because it shows me the processes, the ins, the outs, the do's, the don'ts, all that kind of stuff. I make mistakes. I want to trade a new strategy. I use paper trading first before I put real money into it. I encourage everybody. I have a couple of people in my morning trading group that do paper trading until it gnaws at the back of their head. You got this. You know what you're doing. Let's do real money. Don't do any real money until you know what you're doing. Don't take unnecessary risks. Paper trade first. Once you get it, great. Then put real money in. All right, Michael, why do some companies have weekly options and some only monthly? What's the logic behind it? Wonderful question, Michael. You ready for the answer? I have no clue. There's 9,813 different companies out there. Only about half of them pay dividends. The other half don't. Okay, out of the ones that pay dividends, some of them have options. Some of them don't. Out of the ones that have options, some have weekly options. Some of them don't. Why? It's like, why does the sun rise in the east? Well, I don't know. It just does. Okay, so I honestly, it's a good question. I honestly don't know the answer. But I could find out if you really want me to. But is it really going to be that necessary? It's a simple strategy. Okay, consistent profitability, weekly options. No dividends, no thank you. No weekly options, no thank you. That leaves you about 300 companies to choose from. Now, do you have enough money to invest in 300 companies all at once? I don't. I do 6 or 7 different companies a week. Okay, 6 or 7 companies, I buy them, I sell them, I buy them, I sell them, I buy them, and then I consistently rotate them. Because Lowe's pays on the 4th quarter of the week. Cardinal Health, American Express, Bristol Myers Squibb pay on the 1st quarter of the week. Or, sorry, the 1st week of the quarter. Okay? Caterpillar, I already did that one. Clorox pays on the 5th week of the quarter. So on and so forth. Every 90 days. It rotates. Hey, Rob, thanks. Thank you. Right. Alice, SNCI. Now, Alice, I know you're new here and I feel bad about this, but what the hell is SNCI? SNCI. Okay. SNCI, we can all say this together. You ready? That's a no. No options, no thank you. Sorry, Alice. Dan, Ford. Ooh, yes, no. Okay, Lola the Moodle. Not noodle, Moodle. Okay, Lola the Moodle says yes to Ford. So let's take a look at Ford. F, Ford. Okay, first thing we want to look at on Ford. Are you ready? Doesn't take long. High, low, where was it? Where is it? What's the direction? Down, up, sideways, down. 983. 983. The 10 is going for 4 cents. This week, yet no. Next week, 12. Yes. This week, no. Next week, yes. All right, so next week's a yes. Now let's take a closer look at the chart. Is it the right time to buy? The numbers are okay. Is it the right time? Because just because the numbers work doesn't mean it's a good time to jump into Ford. Now, I personally don't really care if you don't like Ford and you prefer General Motors. To me, it's all about the numbers. Ford has been around for over 100 years. 100 years. Wait a second. 122 years? 1903, I think they were incorporated. I may be right. I may be wrong. All right. All right, so the high of the year, the low of the year, where was it, where is it, what's the direction? Okay, a year ago, we're at 1198. Top of the year was 1483. That was back in mid-July. Beginning of August is our bottom at 950. Look at the last 90 days. Doesn't that look pretty? Okay, down, up, down, up, down, up, down, up, down, up, down, up, down. All right, it's going down at the moment. Doesn't look very good. But let's zoom in a little closer. Yep, definitely a no. 30 days ago, here's your high, here's your bottom, well, here's the low, back up, back down, here's your bottom right here. Went up, now it's coming down. Okay? Simple. We don't really need to do anything else because we know it's going down. It means it's not right. Even though the numbers look good, it's not the right time because it's in a downward trend. As it's going down, it will find a bottom eventually. Remember I said stocks go 2 directions, up or down. That's it. Up, down, up, down, up, down. That's it. Right now it's going down until it finds the bottom, which it will. It'll find a bottom, it will turn around and then go back up. That's the time I want to look at it. Now, Ford is one of those companies I look at every couple of days because it's on my radar now that it's searching. It's bottom fishing. It's looking for the bottom. Once it finds the bottom, it will turn around and go back up again. Now, do I watch it during the day? Do I look at a 5-minute chart, a 10-minute chart? No, I don't. I don't really care about that. I'm looking for where's the bottom. Okay, because there will be a bottom sooner or later. It will turn around and it will go back up again. So I'm going to write Ford for next week. So I keep my eye on it because I look for 2 days to the upside. Well, we only have 3 days left. So if tomorrow's an update and the next day's an update, well, the day after that is Monday. So it's going to be on my list for next week. Ford, there we go. All right. Next, here we go. Ooh, Hark wants to take a look at Micron, MU. All right. User 811-420-70480-591. Why couldn't your parents name you Peter or Tom, Alfred? No, even Pablo or Oscar. Why that? 81420. All right. Anyway, please spend more time talking about dividend stocks rather than complaining about the ones that don't. Well, thank you kindly. All right, Hark wants to take a look at Micron, MU. MU, very simple. Here's the high, here's the low, here's where it was, here's where it is. Look at this. Up, down, sideways, down, up, 103.23. The 104 is 121. Nice for this week. 3 days over 1%. Wonderful. Next week, 219. Well, that's 2%. 1% this week, 2% for next week. Let's take a closer look. All right? A year ago, 85.55, our bottom was the tail, or actually it was the middle of February, 78.62. The top right here, 157.54. Now, the last 90 days looks something like this. Now, the reason why I look at the last 90 days, that's the last 3 months, it's easy to wrap your head around. Okay, last 3 months, down, up, down, up, down, up, down, up, down, up. Okay, right here, what's going on here? Well, you have a big gap down. Okay, let's go a little closer, a little 30 days, because it's 90 days. Okay. Irina, you want to co-host? Well, welcome, welcome, welcome. I have no idea what you want to talk about, Irina. So, if you really want to co-host, I prefer you send me your number. I'll give you a call. We'll chat. If you are like-minded and want to talk about the same subject, great. Sorry, you guys, but every once in a while I have somebody requesting to co-host, so I got to do that spiel. Okay, last 30 days. Okay, here's the last 30 days. Pay attention. Look at this right here. This is what you call a gap down, where there's no activity here. It just goes from here to there. I call that a gap down. Now, gaps have a tendency to fill. Well, this one started to fill right here. Look, okay? And it did fill, but it created another gap here. Okay, is that going to fill? Maybe it will, maybe it won't. But look at it. Okay, high, a low, where was it? Where is it? Look at the motion. Up, down, up, down, up. Well, how much more room we have? We have up here. Okay, but today was a down day. Today, she gapped up, but she pulled back a little bit. What does that mean? Well, it means different things to different people. But let's take a look at what does this stock normally do this time of year. Okay, normally this time of year, well, here's the month of February right there. Nothing extravagant, slightly sideways, no big ups, no big downs, kind of like consistently sideways. All right, anyway, let's go back to where we were. Okay, standard. All right, so if I'm going to buy it tomorrow morning, 103.23, I could sell somebody the rights to buy it from me at 104 and pick up 121 per share. That is over 1%. So the question always comes down to, does it make sense? Do I like this company? Am I willing to buy this company and hold on to it and continuously do a weekly option trade to bring in weekly cash flow? But it always comes down to that very one question. Does it make sense for me? Now, I like Micron, and I do own some Micron. So I love it because it consistently makes me money. All right. Utah J, SCHD. Dude, weren't you paying attention? No consistent profits for 20 consecutive years? No. Now, we looked at SCHD. You really honestly don't want my opinion of it because it's going to make you feel bad for buying that piece of crap. That's just my opinion. Okay? Number one, it doesn't have 20 years of consistent profitability. Number two, it only has about 10 years of dividends, and the dividends aren't consistently increasing. They go up, they go down, they go up, they go down, they go up, they go down. Why would you put your money into a company that's not consistently profitable? But wait, SCHD does get worse. It does. Go look at the numbers. What is the current yield for SCHD? To save you a little bit of time, it's right around 3% per year. Why would you invest your money for a 3% return? You can give your money to the federal government on a federal government bond, which is the absolute safest investment on the planet, and the U.S. government will pay you at 5%. So why are you investing in SCHD if they're only paying 3%, when the federal government will give you 5%? But even then, you're losing money because the inflation is more than 5% a year. And don't give me that Democratic bullshit, because when I went to Walmart to buy a soda 5 years ago, it was 50 cents. Then when Biden took over, it was 75 cents. That is a 50% increase. Now it's $1.25. The same soda I could have bought 5 years ago when Trump was in office for 50 cents is now costing me $1.75. How can you possibly say that's 3 to 5% inflation? Don't want to hear it. Anyway, Pfizer. Dan, I love Pfizer. Let's take a look at it. PFE, Pfizer. All right, first thing, always, the 1 year chart. Emilio, same thing. I don't know who you are, brother. You want to chat, you want to co-host with me? Send me a number, I'll give you a call and we'll chat, okay? But not tonight. I don't know who you are. Pfizer, high, low, where was it? Where is it? Look at the direction. Down, up, down, up. Wonderful. It looks great on the 1 year chart, because the 1 year chart tells me it's in an upward trend at this moment in time. Great. That only means let's take a look at the numbers, because the 1 year chart looked fine. Okay, let's move this back over here. 27.17. So if I'm going to buy this tomorrow morning, I'm looking at 27.17. Okay. If I buy it at 27.17, I want it to sell it to someone at 27.50. 8 cents. No, that's not going to work. Next week, 27.50, 26 to 28. So that is 1%. Okay, so 1% next week. All right, well, let's take a closer look at the chart. Is it the right time to buy? All right, so let's move this back over this way. Okay, high, low, all that stuff. A year ago, that's way over here, a year ago, we were at 29.43. She drops, retraces. Here's the high of the year. The high of the year was 31.54 in the end of July. Okay? End of July. Here's the dates. Here's the prices over here. Okay? This is the high right there. And then she drops. Okay? Now, the 90 days. Well, if today's the 6th, I want to look at the 6th of October, right there. Last 90 days. Look. Here's your high. It drops. Here's your bottom. Now it's going up. That looks freaking awesome. Great time to buy. But that's 90 days. That's 3 months. What does 3 months have to do with this week? Well, I don't know. Hold on, I'm going to look at 30. Luigi Bitto. Yeah, giving $1 per share dividend. I know exactly what Bitto is. Okay? I'll show you what Bitto in a minute. But I tried Bitto last year. Wasn't really happy with it because once it sank, no. But here's the thing. Bitto's not 20 years old. It's going to be a no. Sorry. All right, so anyway, the 90-day chart makes it look enticing. Okay, here's the high, here's the low, now it's going to the upside. You really can't argue with that. Down, up, simple. Don't make it more complicated. However, when we go shrink it down to the 30-day chart, which is right there, then it becomes a no. Why is it a no now? Well, remember I told you earlier you can only have one 30-day high? Well, that was today. One 30-day low, well, that was December 12th, 3 weeks ago. It went up. What do you think is going to happen now? But before you answer, let's look at the numbers, because it's always going to come down to a numbers game. The bottom, right here, 2506. Okay, 2506, right there says the low, 2506. Okay, right there. The high, which was today, 2757. That's a 25 to 27. That's a $2 increase. Now that doesn't sound like a lot, but a $2 increase in 3 weeks, that's 10%. A 10% increase. When is the last time you got a 10% increase for 1 month? So what do you think is going to happen? my opinion. This is just my opinion. You don't have to agree with me if you don't. You go, make up your own mind. Don't listen to a damn word I say. Do your own research. Does it make sense? That's the main question I'm asking you to ask yourself. Does it make sense? 30 days ago, well, all right, the 7th, 12th, 1, 2, 3. 3 weeks ago, it was here. Now it's 10% higher. 10% increase in 3 weeks. Now, if you do not take your profit, okay, here's the thing. If you don't take your profit, it's not really a profit. It's not a profit until you take it. And nobody ever went broke taking profits. Now, I like the company, I do. However, the time to buy was 3 weeks ago when it hit that bottom. Now it's going up. Now, in my opinion, now it's time to get rid of it. I don't want to get married to a stock because what do you think is going to happen next? Well, pretty soon it's going to come down. That's just my opinion. Like I said, don't listen to a damn word I say. Figure it out for yourself. Hey, look at this. Texas brown-eyed girls here. Hello. All right. Is PBR, peanut butter and raspberry, good dividends? No, it's not. But let's take a gander at it. PBR. Peanut butter and raspberry. Weekly. It is a weekly. Okay. Here's where it is. It's in a downward trend, but it's bouncing off of here. But let's take a look at how well they pay their dividends, because that's important for me. For me, it's consistency of profitability. So when I'm investing my money, I want to invest in a company that is consistently profitable. You guys invest your money what you think is best for you. For me, consistent profitability. So let's take a look at PBR. Okay, right here, PBR. Okay, now we're going to take a look at how consistently they increase their dividends. Now they do have dividends, but here's the part where it gets a little uncomfortable. Are you ready? Okay, see, they've been paying dividends since 2001. Well, that is over 20 years, right? I'm looking for 20 years of consistently increasing dividends, which means they're consistently profitable. Well, let's take a look at these numbers. I already know what they are because I've done this many times, but I want you guys to see. Okay, so for those who don't know, this chart behind me, the screen, okay, the screen is live on YouTube. Okay, I have 2 live YouTube channels. So if you're on your phone, you're probably not going to be able to see these numbers. Okay, but March 21st, 2001, a 30-cent dividend. Well, that's freaking awesome. 30-cent dividend, wonderful. The very next dividend was 2 cents. That's absolutely freaking horrible. How can you go from 30 cents to 2 cents? Doesn't make any sense. All right, I'm going to rattle these off. Okay, you ready? 30 cents, 2 cents, that's backwards. 23, 6, that's backwards. 11, 25, 19, backwards. 26, 21, backwards. 21, no change. 27, 47, nice. 23, backwards. 17, backwards. 28, 29, okay. 18, backwards. 12, backwards. 80, oh, nice. 29, yeah. 2 steps forward, 1 step back, 3 steps forward, 2 steps back. No, terribly sorry, Darth. The numbers just don't work for me. Yeah, they have 20 years of dividends, but not increasing, which means they're not consistently profitable. Okay, consistent profitability means they get higher and higher and higher. Now, granted, these are the dividends. It's not the earnings report. It's not the quarterly report. It's not the annual report. But here's the thing. If the dividend is a portion of the profits the company gives back to the investors, that's me and you, or you and I, whatever you want to look at it, if the dividends are consistently increasing, that means the profits are consistently increasing. Because you cannot give the investors more and more money if you're not consistently profitable. And this company is not consistently profitable. So that is already, everybody, 1, 2, 3, that's a no. Oh, that's no. Whatever, that's a no. Okay? Let's go take a look at the next one. La, 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 la. Okay, Howie. We already looked at Abbott Labs. It was a wonderful company we looked at. Now, like I said, this is being recorded. It's not Recorded is being recorded. So it's live at this moment being 10:56 p.m. January 7th. Okay, today, January 7th, 10:56 p.m. at this moment in time. Abbott Labs, we already took a look at it. So later on today, when I am done, you'll be able to see the recording in Abbott Labs. We took a look at Abbott Labs earlier today. Howie, thanks. AbbVie, top pick by the Motley Fool. Well, carrot with hot sauce. Woohoo! Let's take a look at AbbVie. A-B-B-V. Here we go. Now, just to let you know, AbbVie is a dividend king, which means they have increased their dividends for more than 5 consistent decades. ST Sniper, what's happening? How are you doing over there on Instagram? All right, anyway, so AbbVie, let's take a quick gander. You ready? Here's the high, here's the low, here's where it was, here's where it is. Look at the movement. Up, down, up, big down, and then back up again. We're at 182 at the moment. The 182 is going for 22 cents this week. No. Next week, no. Okay, I'm looking for a consistent 1% per week. Now, yes, AbbVie is a good company. They are a dividend king. However, I do buy them once in a while when the numbers work. Just doesn't work this week for me. Okay? Okay, it isn't an upward trend, all right? But if I'm going to do a simple, safe, predictable strategy, it is a covered call for me. I don't want to spend a lot of time, and if it doesn't work, it doesn't work. Okay? 179, the 180s. The 180s going for, well, it says 182. The 182 is going for $1. That's not 1%. That's a little over 0.5%. Don't get me wrong, a little over 0.5% is right around 30% a year. Not bad. Casey, what's happening, Casey? And Dennis Mancini. Dennis, I haven't seen you in a couple days. How are you? Nice to see you again. I am very good with names, so if I see you coming here more than once, I will say hi to you. Utah J, you're new here. Howie, you're new. Holly Patan, you're new here. Speedo, you're new. What stock is good to invest in early January? Okay, Holly, we already did that. Speedo, we just talked about. You actually, Speedo, come on, you gave me a good one a little while ago, and I told you it was a good one. All right, when I hit the wrong button, I have to go back and scroll all over again because I want to answer every single question. And I do. Before I leave tonight, I will answer every single question. All right. How do we get one of those cool shirts? You know, believe it or not, it is on my list to put it in. I have no merch at the moment. This is going to be one of them. So it will be one of them. I have a couple cool sayings. That's a no. What the hell are you thinking? That's one of them. And one of my favorite is, but wait. It gets worse because it happens all the time. People ask me to look at something that's absolutely horrible. And I say, but wait, it gets worse because it usually does. Okay, I'm looking for something specific. Okay, I'm looking for simplicity. I'm looking for profitability. I'm looking for consistency. And I'm looking for safety. That's what I'm looking for. I don't know what you guys are looking for that are here. Okay, some of you guys are new here. Some of you guys have been here for a while. All right, hold on a second. John, MPLX. Come on, dude, really? Do you also look at the trading volume? February 4 is earnings. Okay, now, John, you're new, so I'm going to cut you a little bit of slack. So let's take a look at MPLX. MPLX. All right, John, are you ready? Hell no, brother. Come on. Weekly options only. Okay, you cannot get weekly cash flow from a company that has monthly options unless you have the desire to sit in front of your computer all day. When I say consistent profitability for 2 decades, that means 20 years of profits or more. Okay? Dividend kings, dividend aristocrats, dividend champions, dividend contenders, Warren Buffett's list, great. MPLX is a monthly optionable stock, which means I can only trade it once a month, which means I'm going to have to get at least 4 or 5% from each trade, which you do not do with monthlies. Currently it's at 47.88. The 48 is going for 40 cents. That is 1%. And I got to hold it for 2 weeks. But wait, it gets worse. Because if I don't get it this time, I got to do next week's. Next week's is going between 5 cents and $1. Okay, so 5 cents and $1. Let's go on the high end, $1. That's over 2%. But wait, it gets worse, because 2% for the month of February, okay, not only am I getting 2% for 6 weeks, I like 1% a week, not 2% for 6 weeks, but now I have to figure out, it's at 47.88 now, okay, here's 30 days. Great, now tell me where it's going to be in 6 weeks. 6 weeks is 43 days, is that right? Okay, this is 30 days. Great, now tell me where it's going to be in 60 days. Because that's what 2 months is. I don't like monthly, they just don't work. When I say they just don't work, I always have someone that asks me to take a look at a monthly optionable stock. It's only offering 2% for 6 weeks. 2% for 6 weeks, that's 1% a month. That's only 12% a year. Okay, I don't know about you, but I honestly think that 52, now I didn't go to college, so I apologize that. I say it, I did not go to college, okay? I got out of high school, I went in the service. From the service, I went into an apprenticeship, and then I started my own business. I didn't go to college, but I do know that 52% is a hell of a lot higher than 12%. I don't do monthlies, the numbers just don't work. Please, when I say know what it is you're investing in, if you don't, rule number 1, if you don't understand it, which means if you understood MPLX, you would know that MPLX has monthly options. When I say I don't do monthly options, why are you wasting our time showing us one that has monthly options? Thank you. Next on the list, FE. What the hell is FE? I'll take 1% over negative if it's guaranteed. Holly, the only thing that's guaranteed in life is disappointment, taxes, and death. Okay? So no, I can't guarantee anything, Holly. FE, I don't know, okay, Baird Doodad. Baird Doodad? Okay, FE, I have no idea what FE is. Who knows what FE is? Oh my God, didn't we just do this? Monthly, hell no, I'm not gonna bother. Does 5,000 cash account flag as PDT? All right, dude, I'm Gen X. I have no idea what PDT means. Pretty damn tempting. I have no idea. Crypto Slayer, I'm confused. Thinkorswim is the platform Charles Schwab uses. There's no confusion there whatsoever. You're absolutely 100% correct. Thinkorswim is not used by Charles Schwab. It is owned by Charles Schwab. Now, Charles Schwab has their own trading platform. I personally don't like it because I have to go from one screen to the next, to the next, to the next. Here, I can look at everything all on one screen. I like it simple. Why would you use Robinhood to trade also? Because I now currently have 7 accounts. Okay, 7 accounts I keep track of. Yes, I do Robinhood because Robinhood is what I call party trading account. I can do it while I'm on the shit. You know what I mean? I can sit there, boom, 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 I'm done. It's a different trading strategy I use on Robinhood. Now, when I say I do one trading strategy here and only one, I do it for free, but I have a bunch of different trading strategies. I have to draw the line somewhere, okay? I'm doing this out of the kindness of my heart, giving you all this information for free. I don't charge anyone anything. I'm not asking for any money. I just got tired of the little guy getting shit on, so I'm helping. So I am offering to you a trading strategy that's simple, safe, predictable, consistent, created for a 9-year-old. So I'm assuming each one of you here is over the age of 18. So hypothetically speaking, if a 9-year-old can do it, you should be able to too. Simple, safe, predictable, consistent. If you can get 1% a week, that's over 50% per year. I don't know about you, but for my whole adult life, I have been shit on by the man or the establishment or the elites, whatever you want to call it. This is just my way of giving back. I don't want to go to my grave taking what I know with me. Now, I'm not really creating it for you guys. I'm creating it as a documentary for my children and my grandchildren. You just so happen to be here and be able to reap the benefits of me sharing for my children and my grandchildren. Okay, what I want you to ask yourself, does it make sense? Okay, is it something you think you can do? If not, then you're in the wrong place. Okay, if your money is not that important to you, fine. Give it to a money manager. Give it to an investment banker. But don't complain if they don't give you 30, 40, 50% rate of return on your money. Okay? Compounded annual growth rate. Stu, how are you today? Compound, yeah, I get that. Okay, Luigi, where can I find your preferred list for this strategy? Thanks again. New to this, just started my 1% journey. Okay, Luigi, when I say, okay, ready? Hope you got a pencil and paper handy. Okay, you want to go to Google, or you can go to Bing or whatever search engine you use. In the search bar, you will put in, are you ready? Dividend Kings List 2025. Wait about 0.4, 0.5 seconds, and a whole list of companies that are willing to give you this list for exchange for your email address. Okay? I will eventually, sometime this year, put it into my website, and you'll be able to look at mine also. But I'm going to do the exact same thing. I'm going to go to Google. I'm going to put in the search Dividend Kings List 2025, because the list I currently have is Dividend Kings List 2024, because Dividend Kings List 2025 has not been produced yet, because it updates in January. So this month, my Dividend Kings list is going to change. My Dividend Aristocrats list is going to change. The Dividend Contenders, Dividend, all those. My lists are going to change this month because it is a new year and it just updates. So go to a search engine, Dividend Kings List 2025. All right. Zartran San, good evening. UPS, I love UPS. UPS, great company. It is on my list. All right. But let's see if it is good for this week. All right. Here's the high, here's the low, here's where it was, here's where it is. Look at the movement. Down, up, down, up, down, up, down. And it's bouncing here, going to the upside. 125.33. The 125 is going for 78. Not this week. 125, 176. Yeah, I like that one. But, yeah, even the 126 is going for 130. Nice. For next week, it's a nice trade. 1%. Because you're not going to get 1% for 3 days. Because we have 3 days left. That's it. No, we have 2 days left. Because there's no, one of the days this week, the market's not open because of Jimmy Carter's passing. So they're going to, in the honor of the president, they shut the economy down for a day. All right, is what it is. All right, so the numbers work, okay? The numbers work, okay? It's over 1%. Thursday, thank you, John. Okay, John says the market's not open on Thursday, but the market will be open on Friday. All right, so the numbers work. Great. What's the chart telling me? Okay, now the chart tells a lot of different stories. Let's make it a little bit bigger so we can get a better look at it. As I said, here's the high, here's the low. That's where it was. This is where it is. You can get any third grader to say, hey, trace it out. Okay, up, down, blah, 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 blah. Okay, that's the 1 year chart. Fine. Now, let's get a little closer and look at the 90-day. The 90-day gives me an idea of the last 3 months. Now, the last 3 months is closer to today, the present time, because we don't really care what happened yesterday. We're concerned of what's happening tomorrow and the next day. Well, tomorrow and the next day is illuminated by what just happened today and yesterday. So let's take a look. Here's a 90-day high. Here's your 90-day bottom. Look, up, down, up, down, up, down, up. Now it's going to the upside. Great. Well, the 90-day tells me it's in an upward trend at this moment. So let's get a little tighter and take a look at the 30 days. Better view, right? Up, down, up, okay? 1, 2 days the upside. Here's the bottom right here. 2 days the upside. Well, that's up. Yeah. Okay, let's take a look. Now, what does it normally do this time of year? For that, we take a look at this seasonality chart. Now, UPS has been around for a while, but look at the movement in UPS. This is a little different than what we've been seeing so far. Look, the first of the year, she goes down. Then she goes up, goes down, then go up, then goes down. Then look towards the end of the year, then she goes up nicely. That's UPS. Now this should give you some thinking stuff. When's the best time to buy UPS? Well, it looks like it's the beginning of July or the beginning of November. That looks like the best time. So you should take out your calendar and say, all right, let's look at UPS, the beginning of July, the beginning of March, and the beginning of November. Because it normally goes up. Normally. All right, well, we're interested in January, right? So January, here we are. Okay, now, doesn't take a genius to figure this one out. Okay, for about a week, we're going to go sideways. Because see here, we're on the 7th. Okay, this is today, right here. So for the next week, we're going to go sideways. And then, from a week from now, it's slowly going to go down. So here's a question. Does that sound like something you really want to jump into? Because once you pull back a little bit, what happens after that? Well, okay, look at the first quarter. Well, the first quarter, well, actually, it's just January and February. Okay, January and then February. Doesn't look like the greatest investment for this time of year. But I'm not telling you what to do. I'm just, for me, if I'm going to jump into it, I only want to jump in for 1 week. So I want to make sure I'm damn right. Okay, because then after 1 week, has a tendency to go down. Now, does that mean it's going to go down? Doesn't mean that at all. Only thing it means is, for the last 10 years, it does, on an average, go down this time of year. That's all it means. It doesn't mean that's what it's going to do. It just means that's what it did the last 10 years. All right. So I like to stack the odds and probabilities in my favor. That's what it normally does. We got 15 minutes left. I'm not going to show you any more stocks. I'm just going to answer the questions. Because I got a lot of questions here. And I always say, I'm going to answer every single question before I sign out. Okay? So, no more stocks. Let's answer questions. Callie McEracle. TOS was built by Tom Sosnoff. Yes, I know that. Option trader who also pushed in the weekly options. Yes, I got that also. However, Tom Sosnoff sold it to TD Ameritrade. TD Ameritrade got bought by Charles Schwab. So now Charles Schwab owns this. I've been using it for 20 years. I honestly really don't care who owns it as long as I can use it, okay? Because I like it. I've looked at Charles Schwab. I don't like their trading platform. Okay, I looked at a lot of them. I actually wrote a book 15 years ago, Choosing the Right Trading Platform, where I did take a look at about 50 different trading platforms and gave my opinion 15 years ago. Things are a little different now, because 15 years ago when I first started trading, a commission was $250. So you better make sure that you're right. Nowadays it's basically free. Okay, Adam, what's your website, and do you have a list of companies that meet your profitability requirements? Well, Adam, it's simple. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. That's about 300 companies. Okay, Saffron Sand, Bosa, we'll have to take a look at it later. Okay, Crypto Slayer, what percentage of your portfolio do you utilize in each trade? Well, 20%. If I'm doing 5 trades, it's 20%, 20%, 20%, 20%. 98% of all of my money is invested at all times. Now, people always say, what, are you crazy? Why are you doing that? Well, because I believe in the American economy. What do you think about 22-hour trading? I like it and I don't like it, John. Because is everything going to be available? And what are the rules and what's going to change? Okay? And I always look at end-of-day data. So, you know what? They're going to change. I'll make adjustments. But I'm looking for consistency and profitability. All right, let's keep on going. Rizmeal, you said you shoot for 1% a year. How much did you make last year? Hold on. Thank you, John. Okay, Rizmeal, to be 100% honest with you, okay? This is one of those weird things, 100% honesty. I'm going to show you my trading account right here. Okay, I'm still making the calculations, all right? I'm still calculating the profit and losses because it's not really my thing, dotting the I's, crossing the T's. But hopefully by the end of the week, I should have a better idea. But just to give you a little tidbit, as far as I know, account number 1 is up 95%. Account number 2 up 80%, and account number 3 is up over 40%. Now, account number 3 started in July. Okay, so last year, 2024 was great. 2023, not so much. I think I only did like 45% in 2023. But this year is more like 80 to 90%, 2025, 2024. And I'm getting old, I forget things. But anyway, besides the point. Where were we? Back here. All right. All right, late night AD, do we go through the members area to join the mornings with you? The members area, no, actually, if you go to the website, now I told you I didn't want to do this Let's go back. 'Cause I usually don't try to sell anyone anything, but if you go to the website, the 10-minute trader, here's the page you land on. Okay, that right there, it says trading live online. If you click on that, that is a hyperlink to Dividend Stock Talk. Okay, that is where the morning trading group is. Now, I'm not trying to sell anyone anything. It's just I'm answering a question. Okay. Pedro, James, if in covered call the stock turns in the money, the option contract, do you conserve the stock and roll? Pedro, awesome question, dude. Seriously, awesome question. Here's what I say to that. You ready? I cannot answer the questions of Friday afternoon with the information I possess at this moment in time. What that basically means is on Monday I do my buying. I have an idea of what I want to happen. What happens on Tuesday, Wednesday, and Thursday, I have no control over. But when I buy on Monday, Friday the option expires. So the morning trading group, Monday, Tuesday, Wednesday, Thursday, jumps in at 9 a.m. every day. Friday we jump in at 2:30 before the market closes. So everybody in the class has the opportunity to take a look at their current positions and say, what the hell do I do? That's why I'm here. I will take a look at it and I will say, well, here are your choices. I never tell someone what to do. I give you opportunities to answer that question for yourself. So if by chance, hold on, let me change this. If by chance I buy UPS at 125.56 and I sell off the 126s and I get my 1%, great. I know that ahead of time. But what I don't know is at 3 o'clock on Friday afternoon. Remember, at 3:59 is your last opportunity to make a trade before the option expires. Or should I say, for this week's option to expire, because we always have next week's. So at 3 o'clock Friday afternoon, I decide, do I let it expire? Do I let it get called away? Do I roll it forward? What are my choices? I have 4 or 5 choices to make on Friday afternoon. I don't know what they are until they present themselves to me. Here we are, it's 3 o'clock Friday afternoon. Here's where the stock price is, here's where the option price is, and this is the direction in which the stock is flowing. Okay, so I cannot answer the question of Friday afternoon on a Tuesday night. I have to wait until Friday in order to be able to do that. Okay? How do I join my class? Cheetah Queen, I just showed, I forget who it was. All right, right over here. Dividend Stock Talk, which you get through the 10-minute trader. Okay, David, Pedro for other 1%. Well, Pedro, here's the thing. On Friday afternoon, we take a look at all the opportunities that are in front of us. Okay, now every once in a while, I'll have a stock, I'll buy here, and it drops down here. As a matter of fact, I bought US Steel at 41. It's currently at 31. Okay, I bought, well, I'll pull it up. I said I wasn't going to do this, but here we go. US Steel. Okay. I bought US Steel at 41, right here, way up here. It's currently way down here at 33. Now, this week, I sold the 32 options, but I rolled it forward for 2 weeks. So whoever bought that option has a break even. It gets a little complicated now, okay? But whoever bought it from me has the opportunity to buy it here. But if I roll it forward, it makes it more expensive for them to roll it out. This way I keep trying to break even, make money on it. So everything changes at 3 o'clock on Friday afternoon. That's when we take a look at it. David, good evening. Thanks for all the information. You're welcome. Oh, Rising Puku. Is that Raising Puku? Raising Puku. All right, first time listener. Cool beans. Rob, thank you for that, Rob. Pacific Palisade, I have no idea what that means. ENB, no. PBR, we already looked at that. That's a no, co-host. Pat Dan Mac. Yeah, the funny thing is, I will get a request 4 or 5 times a night for people to co-host. And I've never heard of these people before. So why would I invite them if I have no idea what they want to talk about? Hello, can you talk about AGNC, please? Okay, Vando, you want to talk about AGNC? Ask me tomorrow night. Okay, I'm here from 9 o'clock until 11:30. Now at 11:15, I stop looking at stocks and I answer all the questions. I answer each and every question, and once I'm done answering questions, I'm done for the night. Okay? Pedro, he usually only rolls if he sold the calls below stocks. Thanks, hey, Rick. Thanks, Rich. Uh-oh, big money. Big money Fuentes. ¿Qué pasa, amigo? Thanks for sharing your knowledge with us. You are welcome. No. No, I forget what it says, but you're welcome. Facts, thanks, Rob. James Hunter, what do you think about CRV? I don't think I've ever heard of that one. GIS, General Mills. No. CCL, Carnival Cruise Line. Nice, has nice numbers. Can you talk about Nucor, NUE? I like Nucor. However, we're past our timeline, so ask me about it tomorrow. YouTube channel 2 is not showing you. Uh-oh. I always find that interesting. YouTube 2 is not showing me. Come on. All the way down here, all the way down here, view all. That gets to my links. Hold on a second. YouTube channel. All right. Okay, see, YouTube channel, there's me live, and here's me just a screen. Okay, 2 lives. Okay, one, me standing in front of the screen, like this, and this one, the second one, just the screen, which is just the screen. So I have 2 live YouTubes. They both seem to be working just fine. Okay, let's go back to those questions. Whoops, never mind. Okay, Big Beanbag. Uh-oh. All right, if I want to jump into the game of Dividend, where should I start to look? Okay, Big Beanbag. What I usually tell people that are new here, you're new, I would definitely remember that name, okay? Not that it's good or bad, but it just is what it is. Okay, what I tell you, just keep coming back. I'm here every single night. You look marvelous. You look marvelous. I do look pretty good for 60. Okay, I didn't know 60 was supposed to look like this. Because when I was younger, I thought 60 was old. I don't feel old. Okay, John R. Coleman, I'm new too. Cool beans. Sunday, is it 1% profit per what? Well, 1% profit per week. Here's the idea. You ready? Think of it this way. Sunday, you ready? If I have $100,000 in my trading account, 1% of $100,000 is $1,000 a week. $1,000 a week is $52,000 a year, which is a little over 50% per year. Okay? If it was $50,000, well, $50,000, 1% a week is $500 every single week, if you consistently get 1% every single week. Now, is this guaranteed? No. Only thing guaranteed is disappointment, taxes, and death. Okay? Sunday, I'm new. In what indices tells me the percent I'm looking for? Sunday, I have no idea what you're talking about there, but okay. Thank you for your service. You're welcome. I just got a little tired of, getting shit on. Thank you. Sunday, I'm appreciating this simple strategy. I'm a healthcare worker with no pension and I need to save. Okay, now Sunday, my advice to you would be paper trade for a while. Understand, if you cannot do 5 or 10 minutes every single day, you're going to have to figure it out. Okay? If your retirement, if your money, if your savings is that important for you, you will figure it out. Okay? Get up earlier. Take a shorter shower. Get a simpler breakfast. Do it during lunchtime. Figure it out. We all have 24 hours in a day. Okay? Sleep however much you got to sleep. Work however much you got to work. But if your money is important to you, you will figure out where to get 10, 15 minutes a day. All right. Do you drip them or cash them? Okay, now I have 7 different accounts that I take care of. 7. One of them, this is important, so I'm going to show it to you. One of them, account number 1, okay? See where it says right here? All right, let's click on this. These are the trades I made this week. Walgreens, Harley-Davidson, Macy's, Advanced Auto Parts, Harley-Davidson, Mara, Macy's. Okay. This week, I made 1.89%. Do you see this right here? Withdraw 1,200. The profit for this week was 3,513, but I withdrew 1,200 bucks. Okay, you will see that on every single week. Withdraw 1,200 bucks. Withdraw 1,200 bucks. Withdraw, withdraw, withdraw. Okay, go all the way to the top. I'm still working on the calculations. As of this moment, I started off with 117 in January. I dropped in another 21 in July. Current balance is 188, and I already took out 48,000. So if you add that 48,000 to the 188, yeah, it was a nice return for this year. Mara does not pay dividends. Mr. Premium, you're absolutely right. When I say I invest in dividend stocks only, primarily, that's me. However, I do take a look at Mr. Warren Buffett, what he trades. Now, if he makes a trade, I say, all right, it's good enough for me. Now, Apple is not on my list, but it is on Warren Buffett's list. Paramount is not on my list, but it is on Warren Buffett's list. Okay? So if there is a trader that I really admire, like Mr. Warren Buffett, I will trade what is on his list. Okay? So to answer your question, Frank the Tank. I like that movie. That was a good movie. Frank the Tank. All right. Yeah. Some of them are, most of the accounts I drip. I reinvest all the profits. But there is one account that I actually take money out of to pay the bills. Okay? When I say I live off of my 1% every week, yeah. Ricky, purchase stocks. I'm sorry, trying to understand the steps. Simple, Ricky. Step number 1, make your assembly of the stocks that you like. Okay? Create a list. What stocks do you like? AT&T, IBM, Home Depot, Lowe's, Colgate-Palmolive, Clorox, Bank of America, AIG, companies like that. Okay? Now, once you got your list, throw it into a calendar. Why a calendar? Because the calendar will tell you when they're paying their dividends. Why do we want the dividend calendar? Okay? Because the dividend calendar will tell me when the stock is paying its dividend. Now, why is that important? Because just before the green little dot, the dividend date, the stock has a tendency to go up in value. If the stock is going up in value, well, you know it's increasing. Great. Well, what is the chart telling me? Just because the calendar tells me it normally goes up, well, what are we, the people, the investors, that's you and me, okay, what are we thinking? Because this is what we are thinking, okay? This is what the corporation says they're doing. The corporation says this is what we're paying our dividend. Great. What are we, the investors, saying? Well, we, the investors, are saying 42 is too high. Well, here we're saying, wait a minute, 30 is the bargain. Okay? So is it going up at this point in time, or is it going down? The dividend date will tell you when the stock normally goes up. If you know it normally goes up, great time to buy. But is the chart saying it's the right time? So you got to put the two together. Right timing. After you assemble your list, put it into a calendar, it tells you when to buy. Then you take a look at the numbers. Where's the high? Where's the low? Where's it going? Blah, blah, blah. And then, am I making my money? What am I buying it for? What am I selling it for? What am I collecting? If I'm buying it for $33.40, I'm going to sell the $33.50. I'm going to pick up 46 cents, which is more than 1%. If you don't know how to figure out the percentage, it's so easy, it's going to make you feel foolish. Really, it is. 33.40. 33.40. You take the decimal point, move it over 2 places. 0.3340. Okay? 33.40, 0.33. So 1% of $33 is 33 cents. It's actually that easy. It is. Okay? 1% of 33 is 33 cents. Okay? That makes you kind of foolish having to ask that question. What's 1% of 33? It's 33. Anyway, so, yeah, 46 cents is more than 43. That's more than 1%. Then the questions you got to ask yourself. Number 1, does it make sense? Number 2, do I like this company? Number 3, do I like this company at this current price? Number 4, am I willing to buy this company, hold on to it for the rest of my life or until I make my profit? My profit is if I buy it at $33.40, I sell it at $33.50. How many weeks at getting 1% every single week until it hits $33.50? Simple. And if it's in an up, look at this, down, it's going up. You cannot argue with that. The high, the low, now it's going up. If it's going up in an upward trend, what's the perfect time to buy? U.S. Steel, okay? U.S. Steel, they've been in business for over 100 years ago. Dale Carnegie founded the company. Okay, let's keep on going. Pedro, thank you very much. Dude, bro, gambling with no edge. Okay, what do you think about Palantir? Okay, Salon Beauty. Thank you for the question. I appreciate your interaction. However, when I say never buy something you don't understand, so when I say never buy something you don't understand, I make the assumption that you understand what you're talking about. And if you're talking about Palantir, PLTR, then you would know Palantir has no dividends. So if the name of the channel is Dividend Stock Talk, which is dividend investing for weekly cash flow, and Palantir has no dividends. Okay, ready everybody? 1, 2, 3. That's a no. Okay, if it has no dividends, then no. Okay, there's over 300 companies that work perfectly fine. And if you don't like Home Depot, Lowe's, AT&T, IBM, Kohl's, Colgate-Palmolive, General Mills, Coca-Cola, Pepsi, if you don't like those companies, don't buy them. But why buy Palantir? It has no dividends. And it doesn't have 20 years of increased dividends. Okay? It just doesn't work. Denata, thank you, Denata. Okay, silly me. I'm not sure, Ricky. If I missed your answer to my question about how can you start with $50 on covered calls, you got to find a stock the way you can buy 100 shares at 50 cents. Not that easy. Now, my grandson started with $50, but he's doing what is called dividend capturing, doing basically the exact same thing, but he takes the stock and he buys it 10 days prior to on a Monday, and he waits for that dividend, and then he takes that. Rye Guy is there to watch. Can you see my question? Is that the question? Can you see my question? Because that's the only question I see from you, dude. Okay, so Rye Guy just here to watch. Okay, Rye Guy just here to watch. The only question I see from you is, can you see my question? So my answer is, yes, I can see your question. Darth Soka, thank you for your wisdom. I really appreciate it. You're welcome. It is past 9:30. I am 11:30. I am done. Now, I have agreed, because I'm doing just a little test. This is the first couple weeks of the year. I am going to jump on again at midnight for those on the West Coast. Now, at this moment in time, I'm not very much impressed with the West Coast, because here on the East Coast, I average anywhere between 100 to 250 people at a time. West Coast, we had 360 the other day, but last night we didn't even hit 200. So I am going to give the West Coast a little bit of leeway, give them a couple weeks to see if they come up there. Is the 1% the covered call contract price against the purchase process of the stock? That's an interesting question. Okay, the 1%, okay, that I'm looking for is the premium. It's kind of like an insurance policy, kinda. Or think of it this way: a down payment, a non-refundable down payment. Okay, look at it this way: if you have a car on your side of the yard, you pull it out to the front. Let's say it's an old Camaro, and you slap a for sale sign at $5,000. Tom down the street says, "Hey, I like your car. Let me give you $500. I will come back on Friday to pick it up." Now, if he comes back on Friday, he will give you the $5,000 for the car. Simple, right? Now, if he does not come back on Friday, you keep that $500 and you sell it to somebody else next Monday. But you can't do anything with it until Friday, because the options expire on Friday. Okay? 10 January, that's this Friday. 17 January, that's next Friday. 24 January, that's 3 Fridays. 31 January, that's 4 Fridays. Every Friday the options expire. So, if I'm in California, James say, what? Hey, Becca Makawa. Nothing against you, Becca, okay? Now, I'm going to be on at midnight, which is 9 p.m. Pacific time, just to give those on the West Coast an opportunity to learn the same thing. Now, I'm going to try it for about a week. If the volume is not the same, I'm not going to do any more, because 6 hours a night kind of takes a lot out of me. But I'm here to help, and I'm going to make that commitment. Mike B, looking to get into options, want to start with debit spreads. Cool. And leap options. What do you think? I think that's a great idea, Mikey. Really, I do. But here's my opinion on that one. Okay? Debit spreads, awesome when they work. So here's the thing with debit spreads that I found. You have to be right 80% of the time, because one option contract wrong will wipe out 2 or 3 that are right. Okay? Now, I've done debit spreads for a long time. I like them because you make money if the stock goes up, you make money if the stock goes down, you make money if the stock stays the same. It's great. But when it goes down to a point where all your options are worthless, yeah, there's no recovering from that. Okay? It takes longer to make a profit, and you have to be right more often than not. And the thing about debit spreads is the one you buy and the one you sell are both going to expire at some point. That's why I like covered calls, because once you buy the stock, that is yours forever until you decide to sell it. But the option will always, always, always expire. Okay, it's a depreciating asset. Okay, regardless of what you buy it for or how much time you buy it for, it is eventually going to be worthless. Okay, and then the leaps, same thing. At some point in time, they will become worthless. So here I teach one strategy and one strategy only. Simple, safe, predictable, and consistent. A covered call is one of the safest, consistently profitable strategies there is. Now, Isa, welcome. I'm just getting ready to sign off. I'll catch you guys later. Mikey, I was also researching a lot about covered calls. It just is hard at the moment to own 100 shares. Yeah, I get that. I do. But here's the thing. You can do stocks that are $3, like MPW. That's like $3 and something change, $4. That's only $400 for 100 shares. Okay? 1 or 2% on whatever you're starting out with. 1% is 1%. If you're limited on your money, you look at stocks under $10. Okay? If you're limited even more than that, well then look at stocks under $5. They are there. You're just going to be a little bit more... Martin, irregardless, isn't a word. You know what? My mother says the exact same thing. My ex-wife says the exact same. Do you know what I say? Irregardless of whatever you say, I'm going to use it anyway. Mikey, sorry, man. I'll let you off for the night. Found your content about a week ago. Excellent, thank you. Ricky, you will get penalized for selling your shares. No, not really. Okay, now Ricky, I don't know what you mean by you'll get penalized for selling your shares. You buy some shares, you sell them. How do you get penalized? I'm not quite sure what you mean by that. But it's past 11:30. You want to carry on this conversation, I'll be more than glad to carry it on anytime you like. Okay? But I created this trading strategy for my 9-year-old daughter. It had to be simple, it had to be safe, it had to be predictable and consistent. Okay? It was created for a 9 years old. Good night, brother. Thank you. You guys have a great night, and I will talk to you guys a little bit later. And for those of you who want to jump in on the midnight, holy cow, it's almost midnight already. All right, and we're done there. And now we're going to end here, and we're ending there. And now, see you later, Michael. Hey, Mike, David Robbins, what are you doing over there, dude? Have a nice night. See you guys later. And now.